All right, good morning, everybody. We're a couple minutes early, so we're not going to actually start class yet. Um, but we could chit chat for a minute. How's everyone doing today? Eisenhans, nice to see you back in the room. Good morning, PFI. Good morning, Chef. You guys ever see like online people's names or their avatars, and you create this persona for them? It's a good day, man. Every day is a good day, Walker. I firmly believe that. And Dwight, I'm doing absolutely amazing today. I'm excited about the day. I really am. I get excited when I have new people in the room. What you compare me to? I compare you to a sniper waiting in the wings for the perfect opportunity. Good morning, Miss Debbie. Nice to see you. Guys, I woke up motivated today. I'm excited about, in case you can't tell from everything I posted above, I'm excited about simplicity today. And it's funny because I was thinking maybe a couple weeks ago, I was building a desk for my wife. Best to be expected. You know what? I like that. I always expect a little more. I had someone tell me, Walker, while we're talking about wisdom from people, happiness is a choice. That was like one of the greatest things in my life is happiness as a choice. Choose to be happy, right? Choose to be consistent. Choose to be embracing simplicity. Make your choices. That's what it's all about. Man, Ron, I'm going to make it, and you're going to be sorry that you keep inviting me one day. I've got to get to Texas first. It's time to go home. So hopefully at the end of the month, early October, we'll be back in either Austin. It's hot here, Debbie. I live in a desert. I like the hot, though. The hot makes me happy. I've got a tremendous amount of arthritis and hardware in my back. So hot's good for me. I'm that guy that when nobody's on the golf course, when it's 105 degrees, I'm out there swinging clubs and happy as I can be. So bring on the hot. You hate the heat. I love the heat. I can't stand the cold. Good morning, Abdulaziz. Nice to see you. So guys, today, what are we going to do today? On your way to Dallas Sunday? My wife has been interviewing all week. Right now, Walker, I am in Richland, Washington. It's the southeast corner of Washington. So for you guys that are brand new and don't know me, this is one of the best things about what we do here is my kids grew up and moved out of the house, and that's an amazing thing. Got paroled from the children. So my wife and I started traveling. We took a 30-day trip from Austin, Texas, up to her first contract as a traveling nurse in Oregon. And we spent 30 days hitting national parks and just stopping and living in Airbnbs and having a blast. And what we do, guys, with day trading, a lot of you guys didn't realize this, but I taught class from 4 different cities in Texas. I taught class from New Mexico, from Arizona, from San Diego, from Sacramento. Yep. So East Washington, Walker, is the high desert. And then West Washington is that what they call the Pacific Northwest. That's where the mountains and the rain are. It's awesome out here. I love it. But it's not home. It's not Texas. So it's cool. The landscape is amazing out here. And the people are wonderful out here. So I like it. It's a great place. But guys, I have taught this classroom from all over, from Central Texas all the way up to Washington. And that's what you can do when you have the freedom. If you have the internet, you can make money anywhere. It's pretty cool. I can teach this class from anywhere. So that's what I'm going to do. I'm going to teach this class. I want you guys to remember, especially my newer people, this is your class. This is not a lecture. It's not intended to be a lecture. It's really supposed to be a conversation. So I want you to pretend like we're just hanging out. We're old friends, right? And if you have a question, ask a question. And it's totally cool. I don't mind at all. And I totally saw something shiny and changed my train of thought. So I was building a desk for my wife. And guys, I was a mechanic in a previous life. I can rebuild an engine, no worries. And this desk came in, and I said, "Well, it's a desk. I don't need the instructions. Those are for people that aren't as smart as me." And I put the desk together, and then I had one more piece to put in. And what I realized is that I put the legs on backwards. I put them on the wrong side. And if I had just taken a second and followed the instructions, I wouldn't have had to dismantle the entire desk. And it doubled the time that I had to spend to get to my goal. It frustrated me because I made it harder than it needed to be. And that's kind of my message this morning, guys. There's a very definite path to get you to where you want to be, and we're going to talk about that. And then it's up to you to make the decision on whether or not you want to follow it. I can tell you from the history of teaching this class for years that the people that embrace the idea that simplicity is good, the people that focus on that simple path, that build a strong foundation, typically get to where they want to be. And if you asked everybody in this room to raise their hand if they did it the hard way first, there's my hand. What you'll find is that a lot of people did, and a lot of people frustrated themselves, and a lot of people got a little bit sideways. And everybody tells me, "Hey, Mark, as soon as I brought it back to simple, that's when I started getting profitable. As soon as I started or stopped chasing everything, that's when I got back to profitable." So what we're going to do, see, everybody does it. There's only 3 admitting it, though. So I start my day with forexfactory.com/calendar, guys. And if you've ever watched news release at 8:30 a.m., we had high impact news, those unemployment claims. And man, I'm telling you what, it made the NASDAQ drop, and it dropped like a ton of bricks. And if you were trying to go long from support, trying to predict what the market was going to do, you got run over. So every morning I look for these high impact, I look for these medium impact. And these are kind of what tell me, "Hey, Mark, go fix a sandwich, go refill your water, go grab a 17th cup of coffee," whatever it is you do in the morning, toast a bagel, eat a waffle. But staying out of the way of news releases tends to be advantageous for the average user because these news releases can create an emotional reaction, and you can't predict emotion, right? So trading should be emotionless, and we should avoid that emotionless. You'll make decisions on whether or not it's right for you to stay out of the way of news, but I can tell you that it's very, very hard to trade. So every morning I go through and I look at that. Everything that I talk about comes from the Nexgen education page. Guys, there are zero secrets in my book. If it's going to help make you successful, I like to share it with you because every time one of you finds success in the market, I'm like a proud papa. It makes me happy. I'm invested in your success, which is why I remind you guys every morning that there is a step-by-step path to getting to where you want to be. And it's simple, and it doesn't involve a lot of thinking, and it doesn't involve a ton of rules, and it doesn't involve extra indicators. There's 2 things that need to happen for you to get to where you need to be. The first thing is post your trades in class. Everything you do, guys, show me a picture. Take a picture, drop it in the room. We'll have a conversation about it. Because if you have a question about anything that I talk about, it can be answered and typically can be answered in just a moment. You didn't miss anything, PFI. Those trades aren't your money. If you're sleeping, that's not your money. That's somebody else's money. Let them get it out of the way. Your money's coming, right? As soon as your rules are met. Don't live in the past, guys. Look at me. I'm preachy today. I'm gonna apologize. Awesome. I have rules for you too, and we'll talk about them. Guys, every time you do something, so this is for my new users, taking a picture. I'm going to open up charts real quick. And your capture software was downloaded on your computer when you got the software. And if you go to the user guide, this is your NinjaTrader how-to, there's an entire section on using this capture software and getting the absolute most out of it. So I'm going to share that. I'm going to give you a fish, but I'm also going to teach you to fish. This capture software is how you and I are going to have a conversation. So if you're brand new and you're like, "Man, Mark, I don't understand what's happening in the market right now," you're going to click that giant red button. And it's a click and drag tool, really, because if I hover over one chart, I only get one chart's worth of information. And guys, your workspaces are designed with 2 charts to allow you to get the overall temperature of the market and then refine it to an entry. So I'm going to click and drag, and I'm going to capture prices, timestamps, because I'm going to compare the two. When I release my mouse, it's going to give me the option to capture a photo. Once I capture that photo, there's my preview. So that's everything that I just captured. And guys, you're going to see everything that we talk about in the day in this one picture. And it's going to be pretty amazing. We're going to talk about trend today. And we can use an arrow to determine that this green background means that the market's going up, and this red background means that the market's going down. That's one of the tools that you can use. We're also going to talk about termination conditions today. So I've got a shape here. I can say this is a textbook termination condition as we teach it. So is this. And one of the magic parts of Nexgen is you're going to recognize these areas. Good morning, Sydney. Long before you ever get there and know not to trade into them. Same with this right here, guys. There's 3 looks right there. We're also going to talk about momentum. You're going to be able to use trigger lines to gauge when the market is likely to continue. Those arrows come in handy. Here's a shape again. You're going to learn how to pinpoint this spot. And when you pinpoint it, that's going to be your trade to the upside, right? To take you right to that red fib. But the most important thing that you can do, the absolute most important thing that you can do is write why. Why did I go long or short? Right? What are my rules? And if you write your rules on your chart, good Lord, PFI, that's a lot to think about. I'll read them. I will read them later. That's cool. So guys, we're going to go back to simplicity today. And PFI, you may have given me a great example. We're going to compare your rules to the rules that I provide for a high probability trend trade. And let's see whose is a little easier. I bet it's mine. So guys, every time you take a picture, write why you did what you did. Because when you present that in the class and you tell me, Mark, I went long here because I noticed that the trend is up and I noticed that I had momentum and the path is clear. And these are my rules for the entry, Mark. Did I miss something? And if you did, you and I will chart read together. We'll go, man, you kind of missed that big red fib that none of your trigger lines got through. And that's probably why this long failed on you. And we'll be able to have this conversation, and it becomes a refinement tool where every day you offer me pictures and every day I provide you feedback. 15 hours every week. I'm here in the room for you. Once you get your rules on the chart, you can click this copy button. It's going to put it on your clipboard. And then once you do, drop it in the room. Snorri, you can post pictures all mornings. Like you can wake up at 4 in the morning and start posting pictures if you want. And guys, this is for everybody. You don't have to wait till the second hour. But guys, my first hour is dedicated 100% to talking about the rules. My first hour is helping you guys build a foundation. So you can post them in there, and then I go through them in the order that they were posted, guys. So if you post a picture and I don't get to it immediately, it's because I'm working on something else or there was somebody before you. But I will catch all the pictures. And if I miss your picture, if you're like, man, I noticed that I was in between Walter and Sean and he didn't click on my link, just let me know. Go, hey, Mark, I think you missed this one. And I'll make sure that I get to it. But the path is posting your pictures in class, guys. If you need help with pictures, let me know. We can get you exactly where you need to be. And the next thing is using this real-time performance in the spreadsheet. The spreadsheet's provided to you. Hey, Jose, I'll give you guys this picture. It's in your Nexgen Study Picks plan. So you already own this amazing spreadsheet. And what it is it becomes a trade journal for you. And I'll tell you what, if you've ever looked at the CME site, they say get a trade journal, use a trade journal, make sure that you're keeping track of what you're doing so that you can gauge your progress. And that's exactly what Nexgen has provided you. We've given you this trade journal where you can go through And every trade that you take on simulator, because right, we're using that monopoly money first. There's no reason to risk live capital in a learning process. Every trade that you take gives you the opportunity to talk about the trade, the conditions that were present, whether it won or whether it lost. And then there's a notes section. So when you and I have a conversation, Dwight, you send me a picture and we talk about it, and maybe I point out something that you didn't notice in the moment, drop it in the notes section. And what you're going to find, guys, is if you use the spreadsheet every morning, if you come back to it every morning and you look at what you did yesterday and you start asking yourself these simple questions. What worked? What didn't work? What kept me comfortable? What kept me relaxed? Go. I just connected my headphones. Um, you're going to begin to see patterns in the market that are bringing you success, guys. You're going to begin to see these patterns repeat themselves over and over. And every day they're going to get a little easier to find. And every day they're going to be, it's like the market slows down for you. Um, and by studying each morning what worked and what didn't work, you're going to recognize these patterns, but you're also going to recognize patterns in yourself. We all have a thing, right? Um, there was a gentleman in the room that over the last couple days, or actually it was a couple weeks ago, but he continually traded into these termination conditions, these areas that are likely to stop the market. And with a couple pictures, we were able to kind of take that, reel them in, talk in depth about those termination conditions, and now he's starting to trade with a clear path, right? Maybe you jump in early, maybe you get out early, but we'll begin to recognize those patterns in you, and then together, through conversations in the classroom, we're going to work towards fixing those and moving you towards stuff that's going to bring you a little more success. So don't skip these steps, right? Post all the pictures that you can. Chef, I see that you did one. Nice. And use that spreadsheet, guys. Create recognition through repetition. We're going to take the first hour and I'm going to discuss the rules, the trigger line and Fibonacci rules for when it's okay to trade. I'm going to focus on a high probability trend trade. Um, my first hour in this classroom is the same as every hour. If you go through and you look on every video posted on YouTube, this first hour is designed to build a foundation. This first hour is 100% dedicated to getting you guys into the position where you can learn to read your charts. Because once you can read your charts, I mean, everything becomes easier. So we focus on what's called a high probability trend trade, and this is going to be defined when every indicator on every chart agrees for the trade. Guys, this is when you're going to have the strongest triggers and nothing in the way and the perfect entry and nothing between you and your target. And the way this trade is taught, this is a trade that typically wins 70 to 80% of the time. This is a trade that's going to create confidence through the memory of success. And this is a trade that's going to give you a foundation that's going to allow you to expand beyond this trade and find those other opportunities that you see more experienced traders taking. But this trade is going to make you into a chart reader, guys. And chart reading is 90% of your day. And nobody believes me when I say this. The average do a darn thing for the majority of the day, but they wait for statistical advantages. And when they're present, they'll get into the market, they'll make their money, and then they'll get out. All right, how am I now? Right when you posted that, Ron, I lost the connection on NinjaTrader, and then it came back. So it's either Discord or my internet's fluctuating a little bit, and I apologize for that. Here, let me do this. I'm gonna hit a couple little connections here and see if we can. Reboot on my microphone too. I need a bigger hamster. I just need to feed the one I have, I suppose. Guys, chart reading is going to be 90% of your day, waiting for an advantage. Trading is about advantages, right? Trading isn't about being busy. Trading isn't about getting the most trades. Trading is about making money. And you make money when advantages are present, guys. So you're going to use this high probability trend trade to build a solid foundation. And it's going to turn you into a chart reader. And when you're a chart reader, you're going to understand where the market is likely to continue. And you're going to use this continuation point for entries, whether it's the high probability trend trade, or maybe it's going to be one of those other trades that are available beyond that. You're going to understand where the market is likely to go. You'll use momentum, you'll use these great Fibonacci areas, and you'll be able to understand where profits should be taken, right? And it eliminates a lot of hope. And then finally, you're going to understand where the market is likely to stop. And this is one of the absolute most important parts of chart reading, I believe. Because what happens is when you understand where the market is likely to stop, we call these termination conditions. And you'll have the advantage of knowing where these termination conditions are long before the market gets here. This is crude oil overnight into the morning. And every one of these Fibonacci areas either created an untradeable bounce or stopped the market cold in its tracks. And a lot of times it did it to the tick. You are going to have the advantage of knowing where these markets or where these areas are. And these likely to stop areas are where the deep pockets investors, the guys that move the markets, they're reacting to the exact same areas. And that's one of the biggest advantages that Nexgen provides you is you know about these areas, you know where they're at, and you're going to have a set of rules to keep you from trading into them. And that's where your patience piece is going to come in. And these likely to stop areas, these termination conditions, when they reverse the market, when they create a full reversal, guys, this is your highest probability opportunity for that trend trade. This is the one that typically wins 70 to 80% of the time. This is a trade that's based on advantages. And this is the trade that's going to set the tone for everything that you do. So I want you to embrace the idea that it can be simple. It doesn't have to be difficult. Let's focus on one trade, the high probability trend trade. And then your job will be to simulate, to get in there and pull the trigger and make mistakes and annotate charts. Write on a chart every chance you get, guys. Even if your rules aren't met, write on the chart that your rules aren't met. And if your rules are met, write on the chart that the rules were met. And if you're just not sure, write on the chart and post it in the room and let's have a conversation about what you see and let's expand into our chart reading. The idea is that you practice the correct rules, not trying to be rich on simulator, right? So that you can have a simulator mansion and a simulator girlfriend with a simulator Ferrari. Guys, it's monopoly money. And what you're doing is you're building muscle memory. So practicing the correct trades, practicing making money with advantages rather than relying on luck to get you where you want to be. Because what I've found is that the people that are simulator millionaires through luck typically blow out instantly when they go live because that luck runs out. We're going to simplify. There it is, right there in the plan to success. We're going to simplify two trades. We're going to focus on the high probability trend trade first. And then that's going to take you into what we call medium probability trades. And medium probability trades mean that most of your indicators line up for a trade, however a small issue exists. Your ability to read your charts is going to identify that small issue. This is probably going to be the vast majority of your trades. But when you execute medium probability trades, you're going to take these trades and manage them assertively. And your ability to read your charts as learned through the high probability trend trade is going to allow you to manage them. Oh, babysitting, lucky you. I hope you have an awesome day. Have a great time with those kiddos. And guys, if there's trouble in your way, your chart reading is going to define that trouble, and you're going to recognize it and understand that it's there and be able to manage assertively. And it'll allow you to reduce your risk, to take profits quickly, to get to a zero loss level. And that's going to be mostly what you do is medium probability trades. But you're going to be able to take those based on your high probability trend trades. So let's get to that. High probability trend trade is only three rules. PFI. A high probability trend trade is only three rules. It is three very simple rules that create very distinct advantages. Those advantages, momentum, a clear path, and an entry area, are the recipe for a trade. This is your high probability trend trade. This is a trade that typically wins 70 to 80% of the time. This is a trade that is based and founded on advantages. Simple. Three rules. Let me put them in the room for you. And these three rules, oh, this is going to bug some of you, happen on only two charts. That's all right. If you're an overachiever but an underperformer, then that's problematic, right? I would rather be an overperformer. Two charts. Two charts creating an opportunity for you to recognize all these advantages. And guys, just one chart is going to lead the way, and that's your large chart. And your large chart is going to define direction, and your large chart is going to define momentum, and your large chart is going to define areas. You are going to get so much information from just one chart that your first two rules, rules 1 and 2, providing you the advantages of momentum and a clear path, must be met on this large chart. And this large chart's a broad stroke of a brush, guys. You are literally painting the side of a barn with this large chart. It's only one bar, the absolute most current bar, and it's going to tell you momentum, it's going to tell you direction, it's going to tell you what areas you need to be looking at, whether it's targets or termination conditions. When those rules are true, when you have momentum and there is a clear path, then you're going to turn your attention to the small chart. And this small chart is a refinement tool. You've painted the side of the barn, but now it's time to paint the trim around the doors, right? We're going to take this large chart, the information, the advantages that it provides, and you're going to be able to whittle it down to pinpointing where the market is likely to continue. And that likely to continue point becomes your entry. And rule number 3 are going to be your entry rules to get you into the market. And this is one of my greatest little analogies here. John Novak put this together for me. The large chart is going to reflect the large crowd opinions of the market, the people that are moving the market. They're going to create the trend. They're going to create the momentum. They're going to create the clear path. When everything in this chart says up, there's going to be this little group, the small crowd, that tries to fight it. And they're usually strong enough to give it just a little push, and this push is called a retracement. And Nexgen users, you're going to be able to pinpoint where that push is likely to bounce. And that's going to be your entry rule on that smaller, faster chart. So only 3 rules, providing 3 advantages. Let it be simple, only 2 charts. You're going to see people in this room with 3 charts, 4 charts, 5 charts, right? I'm telling you right now through experience, 2 charts is enough to build a foundation. And then beyond that, we're going to open up every door based on your chart reading. So without further ado, let's talk about rule number 1. It says strong triggers. Your large chart must have strong triggers. Well, in order to have strong triggers, you must be with the trend. And that's the only way that you can have strong triggers. So let's start by identifying the trend, guys. This is the first piece of the puzzle. This is the easiest thing that you will ever do with the software. If the background on your large chart is green, you're in an uptrend. You should only be looking for rules to be met for high probability trend trades long. If the background on your large chart is red, you're in a downtrend. You're only looking for rules to be met for high probability trend trade short. So if we go to the live market, guys, uptrend or downtrend, what do you think? Give me a U or a D. I want to show you how easy this can be. This is crude oil. It's a downtrend. Absolutely. Nice job, Chef. So what about this one? Uptrend or downtrend, ladies and gentlemen? I sure will, Dwight. Uptrend. Guys, giving yourself the advantage of trading with the trend. Uptrend or downtrend on the S&P? What do you say? Down. And Sydney, I know that you were a second late on the U. So, guys, so that's your first advantage. You've identified the trend and you've committed to trading with it. And what this does is this eliminates opinions, guys. This eliminates you saying, I know that the background's green, but I hope it goes down. I think it'll go down, right? Just sticking to the trend is a lifesaver. So this is your first advantage. And then once you've identified the trend, we're going to make sure that we have strong triggers. And once again, strong triggers, the only way you can have strong triggers in an uptrend is if the small triggers are above the large triggers. And the large triggers are wide and they're angled in the direction of the trend. Your small triggers are these solid lines. 2 solid lines create a small trigger. 2 dashed lines create a large trigger. These are nothing more than moving averages. They're momentum indicators, guys. And when the smalls break away from and separate from the large and that space is created, it means that the odds are favorable for the market to continue in the direction of the trend. The odds are favorable for the market to continue in the direction of the trend. That feels good, right? What an advantage. In a downtrend, when your background is red, the smalls have to be below the large, and the large have to be wide and angled in the direction of the trend. The odds are favorable for the market to continue down. Or you're looking for short trades in a situation where the odds are favorable for it to continue down. So when you have strong triggers up, you have strong triggers down, this is where that broad stroke of a brush might get you looking for an entry on the small chart. And guys, there's one of those tails. This is your pullback, that little retracement, that small fight. You see it on a large chart, it looks like a tail or a wick, but on a small chart, this is 15 to 30 bars in this 1 bar's worth of information. You're going to be able to pinpoint where the bottom of that tail is likely to form. You're going to be able to pinpoint that continuation point. And that's the high probability trend trade, but it starts with trading with the trend and trading with that odds favorable momentum. And we commit to it because when the small triggers work their way inside of the large triggers, we call this weakening of the large triggers. And guys, just the words themselves kind of give you an idea. Strong, odds favorable to continue in the direction of the trend. Weak, anything can happen up or down. Trading's about having advantages. So the advantage of momentum comes from strong triggers. Weak triggers mean that anything can happen up or down. Let's see. For a high probability trend trade, does odds favorable momentum require both small and large triggers to be the same favorable side of the midband as well? Nope. It doesn't, H. And you know what's awesome is this is a great example, and I'm not saying that you've done this, but this is a great example of how your brain is going to try to create more scenarios for this high probability trend trade. So strong triggers, H, that's it right there. And notice that I didn't add any indicators to this picture. I didn't add midbands, I didn't add Fibonacci. So you identify that momentum simply through the trigger line configuration, right? Simplicity. I love it. That's a great question. Awesome question. What you're going to find is a lot of the times they are going to be on the trade side of the midband, but sometimes this is what's going to get you to a midband. So I don't like to say that they always will be, but that's an awesome question. Thank you for asking it. So guys, give me a Y in the room if you're with me. Strong triggers is the separation between the large and the small. I want you to think about scissors opening up, ready to cut. And when those scissors close, you can't cut, right? You can take a stab at it, but you're not guaranteed results. So good stuff. Not that you're ever guaranteed results. So let's go through here. S&P. Are the smalls separated from the large? Is there space between the two? Or are the smalls inside and they're weak? And look at how the market pushes up higher. But if we back up, there's your strong trigger look, and look at that. There's one of those potential tails. We'll circle it and we'll come back to it. That's that best trigger look. That's that weak trigger look. Look how the market dances on a smaller, faster chart when the triggers aren't their strongest. Here we see one of those instances. The trend is down, but the smalls are up and the large are down. So the large and the small don't agree. Guys, this can't be odds favorable momentum. But over here we see odds favorable momentum. And then once again, I want you to get used to looking for these because this is how you're going to study. There's one of those tails. And notice how that odds favorable momentum takes you directly to Fibonacci resistance, that point where the market is likely to go. We're starting to get those chart reads in. This is the NASDAQ. What do you think, guys? Odds favorable momentum? Smalls below the large are wide, they're angled in the direction of the trend. I would say absolutely. That's a market that's likely to continue in the direction of the trend. And you're going to be able to pinpoint potential entries to get you into that market, to go with that momentum. Do you guys see it? Did you see the separation? And look at the continuation, right? And now they start to return. We're losing momentum, and it pushes up just a little bit higher. So Rule number one, the advantage of momentum, guys. That's going to put you where you want to be. That's going to cover a lot of mistakes that new users make. When the market is likely to push in the direction of the trend, that's the direction that we want to be going. So that's your first advantage. Happens on the large chart. Once you have the advantage of momentum, we're going to make sure that the path is clear. We're going to make sure that we're not trading into areas that may reverse the market, that may create a bounce. And the areas that may reverse the market or create a bounce are these magenta divergence highs. And guys, if you're brand new with me, this is a great map just for what you're looking at on your charts. A magenta divergence high, guys. All this is, it's a line in the sand where a move up lost momentum. And a divergence low is nothing more than a line in the sand where a move down lost momentum. So these divergences mean a loss of momentum. We're also going to look for red Fibonacci resistance, blue Fibonacci support, or these yellow one-to-ones. And these are the areas that may create a reversal, that may create a bounce. These are the areas that those deep pockets investors are reacting to. And these are the termination conditions defined. And then, Dwight, we're going to talk about that one, the large chart midband. I'm going to save that for the end of the termination conditions. And then if you have any questions, let me know. But right now, what we're going to do is we're going to figure out on a large chart when one of these lines is likely to stop the market or when we're no longer worried about it. And it's a two-part process. It's a simple recipe, guys. And the first thing that has to happen, I always encourage people to write this down. Price reaches an area, because if you ask yourself every time you're looking at the market, has price reached an area? Has price, meaning these dynamic Renko price bars, worked their way down to Fibonacci support in this particular picture? Price reaches the area. This is the first part, guys. When price reaches an area, all you have to do is ask yourself, where are my trigger lines? The same trigger lines that gave me momentum, are they above the area of support? Or if it's resistance, are they below the area of resistance? If your trigger lines are above support or below resistance when price reaches it, that's an area that may stop the market. It may create a bounce. So we utilize these lines, these Fibonacci areas. We can see them long ahead of time. And when price gets there, this becomes just a simple process of, hey, sit on your hands, and let's see if that market reverses or if it breaks. And areas break all the time, but we don't know what's going to happen in the moment. So if this is a termination condition, if this may reverse the market, and look how the market creates a bounce, this means that I don't have a clear path. And rule number 2 says no termination conditions present. And when they're not, it gives me the advantage of a clear path. So if I go back to it, when is the path clear? The path becomes clear when both the small triggers and the large triggers get to the other side of the area that was behaving as a termination condition. So this picture kind of shows it nicely. I'm going to show you, I'm going to draw. I like to draw a lot. I hope that's okay. Right here, price reached Fibonacci support. Let's make it so it's easy to see. When price reaches Fibonacci support, all you have to do is say, you know what, let's see how it reacts. I don't have to take a short trade just yet, even with that red background, even with the odds favorable momentum. I'm going to wait and I'm going to see if it reacts. When both your small triggers and your large triggers get below the area of support, now that area of support begins to behave as resistance. Now the path is clear. Now we are free to look for those rules to be met once again. And you'll notice that when the area breaks, we have that odds favorable momentum. We have that best of the best look. Every trigger line is below support. It begins to behave as resistance. And there's one of those tails. Guys, this is one of your entries for that high probability trend trade, for that best opportunity to get into the market, to continue with the trend that's likely to push. And the cool thing is that you're going to use that same idea for profit taking. When price reaches that area and the triggers are above, you're going to be able to take profits. So guys, the trade that we're talking about right now is going to happen with a clear path. It's going to happen with momentum, and you're going to be able to take advantage of these moves created by those people that move the market. So Termination conditions, price must reach the area. In this case, we lost momentum. It created that divergence low. This divergence low on its own is not a termination condition. It's just a loss of momentum. So we go through the recipe. When price reaches the divergence low and the trigger lines can't break through, now we have a termination condition. And if this termination condition reverses the market, we're going to call it a strong bottom, and this becomes the precursor for that high probability trend trade. So loss of momentum on its own is not a termination condition, but when price reaches that divergence low, it gives us what we call a pivot stop out, which is a termination condition, and that may reverse the market. So we know no more short trades into that line. Go in the other direction, you're going to see the exact same thing. And this picture reminds you that 90% of what you do during the day is waiting for that statistical advantage. Everything is up and it reaches Fibonacci resistance. Notice how the trigger lines weaken as you get closer and closer to those areas. Resistance holds, the trigger lines remain below, no more long trades. And then it pushes all the way back to Fibonacci support, all the way back to that mid-band. The large triggers are all above. The small triggers are all above. Guys, no short trades. No long trades, no short trades. How am I supposed to make money, Mark? Well, from support, it goes all the way back up to resistance, right? Guys, you're watching a fight between buyers and sellers that you don't have to get caught in because you have Fibonacci, because you have rule number 2. Up here, we get one of those pivot stop outs. Price reaches a divergence high and triggers remain below. It also reaches 2 areas of resistance. Triggers remain below. This area may stop the market. It may reverse the market. And if it does, we're going to call it a strong top. Notice that all the triggers are below. Your green triggers go to red. We get a reversal. The trend changes. I get odds favorable momentum. And there's one of those tails, guys. A high probability trend trade that happens after a termination, that's your highest chance of success. So I'm always asking myself, where's the market coming from? And then there is one on here that says a mid-band may behave as a termination condition if the large triggers are a full bar away. So while we're looking at large chart terminations, guys, I'm going to bring this one up. And you'll see this a lot. And what happens, let me bring this up, is price accelerates away from those large triggers. And this is what we call the gap theory. So the gap theory creates this scenario. If price pulls away from those large triggers really fast, just accelerates away and smacks into an area, whether it's a fib or a mid-band, it typically snaps back to the triggers. It corrects itself. It writes the course. So you're going to see this. Let me find my picture. Price reaches Fibonacci resistance. Guys, this is what we call a reversal bar marker. This shows me where this bar becomes a down bar. That's all it's showing me. That's its only use in these indicators. If my large triggers are below the reversal bar marker, well, then there's room for a full bar back to them. This is when mid-bands and fibs really act as resistance. And here's a mid-band. Let me find the mid-band picture. Price accelerates. I have odds favorable momentum, but it smacks into this mid-band. So Dwight, if the large triggers on your large chart are beyond the reversal bar marker, price is likely to close that gap. And any shorts that you take in here, it's like a vacuum. It'll suck it right back up to those large triggers. And this is where I see a lot of users just get run over. So it's not a trade. It doesn't mean go the other direction. It simply means sit on your hands and wait for the advantage to come back. Did that help a little bit, Dwight? And you see it here. Look how far away those trigger lines are, guys. This is your indication. Don't try that short. Just not yet. Let it do what it's going to do. And then one more. Even with that odds favorable momentum, price reaches these yellow 1-to-1s. Since the trigger lines are all above the 1-to-1s, Nexgen users aren't going short into this area. Nexgen users are avoiding this crazy bounce. Nexgen users are keeping the powder dry. We're not taking unnecessary losers so that we can let our winners do more. No more short trades. And look at how long that fight goes from 9:02 Almost to 940, buyers and sellers are absolutely battling at these key Fibonacci areas. We want to avoid that fight. We don't have to be the first one in the market. We can wait for this termination to create a full reversal. When it creates a full reversal, we'll get all of our trigger lines to the correct side of fibs, meaning that we have a clear path. Smalls are outside of the large, and then once again, there's one of those tails. That highest probability scenario, getting you into the market to continue up to the next key Fibonacci area with all that momentum. So guys, this is your recipe for termination conditions, and I'm going to ask you, is everybody comfortable? This is really the third piece of the puzzle, but I want you to see how effective they are. Price comes down. There's Fibonacci support. None of the trigger lines have broken through. Look at the bounce it creates. If I back up a little bit, there's support, also a pivot stop out. Look at the bounce it creates. Resistance to the tick. Resistance to the tick. Resistance. Resistance. Oh my goodness. Resistance and all the trigger lines below. Guys, over and over, you're going to see this. You have an advantage that 90% of the traders in the world don't have. You have automated Fibonacci taking these key areas, making them easy to identify, and keeping you safe, giving you the advantage of understanding where the market is likely to stop. These are your large chart scenarios, guys. It's going to take a little bit of practice to get good at these, so go through. And every time the market turns, see if it turned. Take a lot of pictures, ask a lot of questions. There's one more termination condition that I'm going to talk about, and this is going to be when that large chart, that slow chart, is changing, but you can't see it because it's so slow, because it's such a broad stroke of a brush. So there's a termination condition, the only termination condition that you'll see on a smaller, faster chart. And that termination condition is 3 divergences in the same price range. 3 losses of momentum in the same price range. Guys, this may reverse the market. And check this out. Dwight, great timing. 3 divergences in the same price range may reverse the market. There wasn't a fib here, but these 3 divergences said, don't try that short anymore. That was a very timely photo. Nice job. So 3 divergences in the same price range. Guys, it may create a reversal or a push that takes you away from having those advantages. It becomes even more powerful when your small triggers work their way inside of the large triggers, guys. When the small triggers are inside of the large triggers, whether it's a large chart, whether it's a range chart, whether it's a tick chart, a second chart, it doesn't matter. It's showing weakness. It's showing a loss of momentum. So if you couple that loss of momentum with 3 divergences, it's more likely to push the market the other direction. And if your third divergence is higher than the previous from a low or lower than the previous from a high, well, then you start getting into those technical patterns that I don't understand. That's what they call a head and shoulders pattern, and it adds fuel to the fire. So you're going to see this on a small chart to recognize change that you can't see on a large chart. And you'll see this look from a low or this look from a high in situations where the market hasn't reached a Fibonacci area to create a bounce, or even with odds favorable momentum, there was nothing there to push the market down, but it pushed down anyway. That smaller, faster chart, once again, Dwight, thank you so much for the picture. That was perfect timing. Price didn't reach a fib. We lost momentum a little bit, but those 3 divergences just confirm that we shouldn't be looking for short trades anymore. Nice job. So large chart gave you momentum, strong trigger lines. It's the first thing that you're going to learn, guys, that trend and establishing momentum. And that's what's going to kind of set the tone for everything that you do. Once you have that momentum, you're going to use termination conditions. You're going to use that idea of where the market is likely to stop to make sure that you have a clear path, that there's nothing between you and your target, guys. This chart reading is going to carry you into every other trade that you could ever hope to take. So get good at recognizing these advantages first, because when these are present, we're going to go to a smaller, faster chart. We're going to refine, and you're going to look for an area inside of favorable large triggers. So you're going to take 1 bar on the large chart, and I want to do this. I was thinking about this earlier, and I've never done this in class, so I'm going to do it. And NASDAQ moves fast, but I want you guys to see this. I'm going to minimize down. That's kind of tough to see. With one bar, I can tell that I'm in a downtrend, right? With one bar, I can tell that I haven't reached an area. And of course, I need a few extras so that I can see these trigger lines. But it's that first bar, that most current bar, that lets me know what's happening and what I should be looking for. And then we're going to take that one bar and we're going to refine it. And I've got a refinement picture to show you exactly how this works. That one bar on the large chart, that most current bar on the large chart, is 15 to 30 bars on a smaller, faster chart. So we're going to use the advantages from the large chart and we're going to refine it to one point where the market is likely to continue, one little window of opportunity. So this one bar is 15 to 30 bars, and we are going to literally, as the market's going down with momentum, we're going to wait for it to push up to the best of the best spot, to that point where the market is likely to continue. And I'm going to show you how to do that. And rule number 3 is going to be so precise that we're going to use a limit order. We're going to wait for the market to come to us. And that limit order is going to be sitting at an area inside of favorable large triggers. And favorable large triggers mean that on your smaller, faster chart, both the large triggers, those smooth moving dashed lines, and your synthetic triggers, these stepped lines, are working harmoniously in a symbiotic relationship, one on top of the other, wide and angled in the direction of the trend. And we're going to look for the areas that fall within them. And those areas can be Fibonacci support or resistance, yellow one-to-ones, or one of those mid bands. These areas provide a bounce point, and high probability trend trades come from lines. But we have to know where those lines are. We have to understand where that limit order needs to be placed. And we're going to do that in a pretty simple process. When the advantages are present on the large chart, we're going to turn our attention to the small chart, and everything should be going up. You should have strong triggers. Your large, your synthetic should be wide angled, one on top of the other. Everything should be screaming that this market's going to the upside, and your palms are going to get sweaty thinking that you're missing out. Our rules say, your rules say, use a limit order to buy or sell a pullback to an area inside a favorable large trigger. So I have to identify my large triggers. I got one ahead on my pictures here. When everything is up, I'm going to identify my large triggers, my synthetics, and make sure that they're strong and overlapping. They're coming up like a shark about to breach in this uptrend, and I'm looking for Fibonacci support, yellow one-to-ones, or a green midband in an uptrend. These are the potential bounce areas, but I have to wait for a pullback, guys. We're going to let the market come down to us. We're not going to chase price. That small retracement in price, that little reversal on a smaller, faster chart that is counter to the underlying trend on the large chart, begins with a reversal bar. And this reversal bar is going to have you creating your window of opportunity. You can use your drawing tool. You're going to highlight those large triggers, one on top of the other, and then you're going to look for the areas that fall within. Remember, mid bands, fibs, yellow one-to-ones. And you're going to create a window of opportunity. And for a long trade, it's going to be from your highest point of support to your lowest point of support inside of favorable large triggers. And I want you to embrace that last part of the phrase, inside of favorable large triggers, because price tends to snap back and close that gap. You're going to activate a limit order. You're going to wait for the market to come to you right at the top of that window, guys. And you're powerless at that point. You don't control whether or not the market comes back. You don't control whether or not you get a fill. You don't control anything other than whether or not your rules are met. But if the market does come back to that area of support inside of favorable large triggers, in this case the mid band was the highest point, your limit order was waiting for it, and you're now in a long position. And guys, you are in a position with the advantage of momentum given to you by the large chart. You're in a position with the advantage of a clear path provided by the large chart. And you're now in a position with that entry area, having gotten in the market where the market is most likely to continue, guys. And it only took 2 charts to do it and 3 very simple rules to get to this entry. And now let's talk about the realities of trading. Market's going to come down, and if it hits that entry, you're in a trade, guys, and you feel good because the advantages are there. Remember that we created a window. You created a window from your highest point of support to your lowest point of support inside of favorable large triggers. And this is the area where the market is likely to continue, which means that you need to prepare yourself mentally that that market may tick against you, right? It may go a point past your entry. It may go 2 points past your entry. But if you're still inside of that window, the advantages are still going to be there on the large chart, guys. This is still your trade. And this is why repetition is such a big deal. This is why simulation is such a big deal. What you're doing is you're developing trust in the methodology. But the reality is that anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. And you're going to have to embrace the idea that small losses are a normal part of a positive equity curve. You're going to have to embrace the idea that if you take this trade 100 times, you're going to lose 20 to 30 of them. And you never get to pick which 20 or 30, right? Because your entries are consistent. Your rules are consistent. Your criteria for entering the market is consistent. And that's how you're able to develop that statistical advantage. We can recognize where the market is likely to continue, guys, and you can put a protective stop right behind it. If the market goes beyond that window, you'll have a stop 4 or 5 ticks below it, waiting. And you'll take a small loss, and that's okay. And you'll simply dust off and say next, and you'll write your rules on the chart. Did you have these 3 advantages? And if you did, then you know that it's a trade that wins 70 to 80% of the time. And this is just a cost of doing business. This is like paying rent. Does that make sense to everybody? All we're doing for our first 20 days is finding this entry, creating this window, and being able to get into the market at the absolute best of the best spot. Because, guys, great entries create manageable trades. I'm going to share with you some of the pitfalls of brand new users. This smaller, faster chart is a refinement chart, and there will be fluctuations on a refinement chart. Very often I see new users in right at the top of this bar where they thought the market was going without them. Anyone ever done this? We call this the fear of missing out. And the fear of missing out causes investors to make kind of sketchy choices sometimes. And getting in at the top of this bar so far from the window doesn't do anything to increase profitability. It doesn't increase your chances of success. What it does is it guarantees you a larger loser if this is one of that 20%, right? And the other side of that is look at how short the distance is to Fibonacci resistance at this point. You have compounded your risk and you've minimized your profit potential. And guys, this goes back to that trust too, because I'm going to tell you from experience, it's a little scary to get in when the market's coming down until you develop that trust. And this is why we simulate over and over again to make sure that you're comfortable with this idea. Another thing is new users say, but Mark, my triggers turned red against me. And that's why I always remind you guys, what happens in one bar on your large chart is 15 to 30 over here. And if we don't get that little trigger turn, we're probably not going to make it to our best of the best area. So don't get caught up in what's happening on the small chart. Let the large chart lead the way. Let the large chart tell you that with all of this momentum and a clear path, you're in a great position, especially because you entered at the area inside of favorable large triggers. And guys, this is the trade that I'm going to take 1,000 out of 1,000 times. Because of the advantages present, this is my result typically 70 to 80% of the time. Because I wait for the pullback, my risk is reduced, and then when the market begins to move in the direction of the trade, I'm going to reduce it even further below that reversal bar. I'm managing my risk before I ever manage my profits. Ultimately, I'm going to be able to use key Fibonacci areas as profit targets. I know exactly where the market is likely to go, and that's where I'm going to get paid, right? And this is your focus for 30 days, guys. This is your focus. Build that foundation. Build the ability to read charts through this high probability trend trade, and it's going to open doors for you to take all the other trades that you see people taking. And I want to show you. Why do I keep circling those tails? Well, I keep circling these tails with odds favorable momentum and a clear path because they're likely to pull back to areas of resistance inside of favorable large triggers. Guys, this was a high probability trend trade. And it resulted in, let's see, where did it stop? It stopped at 71. It originated at 05. 61. Well, how many points is that? That's 29. Good Lord, that's a lot of math. That's 35 points at $20 a point. I don't know, do the math. What is that, a $700 trade per contract? That's not so bad, but look at the advantages. Downtrend, strong triggers. You guys want to find the entry together so you know how to do it? Let's do it, guys. Let's do a bar by bar. There's your look on the large chart, right? Let me see where that came from. And when I have that look on the large chart, this is the look on my small chart, right? Everything says down. Do you see how I have smalls below the large? The large are getting wide. They're angled in the direction of the trend. Guys, give me a Y if you see odds favorable momentum. Because if you don't, I want to go back and I want to talk about odds favorable momentum before we move on. Everybody's cool? All right, so the recipe for termination conditions has price reached an area. There's nothing there. There's no fibs, right? There's no yellow one-to-ones. I have a clear shot. And some of you might say, but Mark, I see a fib down here. Guys, if price hasn't reached an area, that fib's a target. That fib is not a termination condition. I have odds favorable and I have a clear path. Everybody's good with that, right? So the rules are met on the large chart. I have the advantage of momentum. I have the advantage of a clear path. Let's refine that broad stroke of a brush. Here's my small chart. Here's my fast chart. Everything says down. My smalls are outside of the large. My large and synthetic are working together. So I'm just going to look, right? I see some resistance. I see a mid band. Everything's going down, but it's not time to place that limit order yet, guys. I need a reversal bar, letting me know that the pushback has begun. And there it is. There's that reversal bar. New users. Are these one-to-ones on a smaller, faster chart a termination condition? Or are we defining our areas on the large chart? That was a loaded question. I'm leading the witnesses. Large chart has a clear path. Another common mistake is people say, hey, there's one-to-ones there, Mark. Isn't that a termination condition? Absolutely not. This one-to-one, hopefully, is going to give us the bounce we need to get to our window of opportunity. So at the time of this reversal bar, I'm going to look from the lowest point of my triggers to the highest point of my triggers. And my areas have to be inside of these favorable large triggers, which means for a short trade, my lowest point of resistance, the closest point of resistance to price, is a mid-band. And then my highest point of resistance inside of favorable large triggers also happens to be a mid-band. That's it. Do you see how we've refined the information from the large chart? Guys, 15,205.50 is where the market is likely to continue. Because the mid-band's moving down and price is moving up, I'm going to probably put my entry 2 to 3 ticks below. I'm going to make sure that I'm not missing out because with all this momentum, I'm not expecting it to push that high. There's nothing for it to bounce off of here. And then the market comes up, and it comes up again. See how the mid-band's coming down? And I'm in a trade at 15,204.25. My initial stop is up here outside of the window of opportunity. And guys, this looks like a lot. That's about $85 a contract that I'm risking with all of these advantages. Give me a Y if everybody's comfortable with this. Guys, all we're doing is defining an entry point because great entries create manageable trades. For 20 days, the only thing I want you guys worried about is getting into the market at the right place. Don't worry about wins and losses. Don't worry about management. Don't worry about anything other than getting in with 3 advantages. That's it. And the market goes a tick against you, and some of you panic, And then you panic even more because there's another bar against the trade, but it's still inside of that window of opportunity. And then I get a reversal bar in the direction of the trade. And check this out. At the time of that reversal bar, I'm going to go 2 ticks above it, which means on this trade, I have about $30 worth of risk. $25 worth of risk, guys. That's freaking amazing. And I want you to see where this momentum, where that clear path, this is what the market does. And that is your first sign of a problem, and it's right there at blue Fibonacci support, guys. This is your high probability trend trade. The rules are exactly the same, PFI. And let me put my disclaimer out there. Guys, the NASDAQ does not trade like crude oil. The NASDAQ does not trade like the S&P. If you can't recognize a trade setup on the S&P or crude oil because you're still learning, if you can't recognize that setup within a matter of seconds, you are probably going to get absolutely slaughtered on the NASDAQ. It's not guaranteed, but if history is any indicator, there's a different set of criteria for the NASDAQ, guys. The rules are the same. The advantages are the same. The momentum is the same. There it is again. Remember those tails that we talked about? We don't trade tails. We trade pullbacks to areas inside of favorable large triggers. But there's things to think about beyond those rules, PFI, that are exclusive to the NASDAQ. So make sure that you're comfortable with everything and reading in the moment. And I'll share some NASDAQ stuff with you guys. I don't mind at all. But right now what I'm concerned about is I want everybody in this room to give me a why. If you feel good about keeping it simple, if you're prepared to embrace the idea that if you don't confuse yourself with extra rules, if you don't confuse yourself with extra charts, if you don't give yourself too many items to think about and you focus on the best of the best, this shit's easy. Pardon my French. But here's the deal. You're not going to be a pro trader in a week. You need to take picture after picture after picture. You need to fill up that spreadsheet, guys. You need to learn the rules, what they look like, so that it becomes easy. It's a path. It's repetition. I just gave you my spreadsheet. There's over 250 pictures of clients' trades that they posted in the room, and they all revolve around the advantages that we just talked about. This is a great study tool for you guys. This is what you're doing as a brand new user, guys. If you try to bypass this process, you're going to spin your wheels and frustrate yourself. The first thing that we learn is trend, whether it's up or down. All of you proved to me that that takes about 1/8 of a second to be good at, right? Then we added to the trend strong trigger lines. In an uptrend, we know exactly what we're looking like to have the advantage. In a downtrend, we know exactly what it looks like to have an advantage. The only thing that you have to do is commit to having that advantage, right? That's the part that I can't control. That's the part that you need to control. And then we talked about you have to have a clear path to go with that momentum in that trend. Price reaches the area, no triggers through, you know to sit on your hands. When the small and large break it, you know to look for trades. There's one of those tails. It really is that simple in the beginning, guys. And avoiding termination conditions is going to keep you out of a lot of losers as a brand new user. But again, you've got to study the look and make it easy. And then finally, the final piece of the puzzle to finding the perfect entry is being able to identify that area inside of favorable large triggers and squash the fear of missing out and just keep taking it on simulator. Keep posting that picture into your spreadsheet until you're comfortable with the idea that you can buy in a market that's coming down towards you or you can sell in a market that's coming up at you. It's the trust part that comes through repetition, guys. And once you learn to trust, you'll take that entry because that entry creates a manageable trade. So to keep you focused on the best of the best, I give this to the classroom every day. If you print this checklist out and every time you take a trade, Every time you take a trade, you write these rules on the chart. You are going to visually see the rules being met, and you're going to be able to read exactly what it means to have those rules met. You're going to say this is odds favorable momentum, and you're going to point an arrow to it, and you're reinforcing that this is your best of the best look. And you're going to write on your chart no termination conditions, and you're going to point an arrow to that top of the bar that hasn't reached an area. And what you're doing is you're confirming your ability to identify areas where the market is likely to stop. And then you're going to write your rules for entry, pull back to an area inside of favorable large triggers. And you're doing this so you're reinforcing the idea that you don't want to jump in up here or you don't want to jump in over here, that this great entry creates a manageable trade. So you're training your brain to identify and embrace these advantages, guys. And I'm telling you, if you go through this process of typing on your charts, it's going to accelerate the path. If you print this checklist out and put it on your desktop and hold yourself accountable to simplicity, it's going to accelerate your learning curve. I'm also giving you this one. This is the exact same high probability trend trade checklist, but this one has pictures of what each thing means. Excuse me, I'm stumbling over my words. Here's your termination that creates a full reversal, guys. This is your good top or bottom. And notice you can take a trade without a good top or bottom, but it's not falling into that highest probability. It's still a great trade, right? This is still a great trade, but the percentage that it wins might be a little less than this one here. Here's your odds favorable momentum defined in pictures, what it means to have the advantage and what it means for that advantage to go away. Here's your termination conditions, clearly defined, letting you know when that path is clear. And then guys, here's your window of opportunity. And this goes from the reversal bar that starts the pullback, looking for the large triggers and the synthetic triggers, and then refining to that area inside. Doesn't this look exactly like the one that we did together at a class? These patterns repeat themselves every day. This picture also reminds you that the areas outside of the large triggers are not a part of that window of opportunity. This checklist should be reviewed every morning for the first 30 days. This checklist, you should take a look at it, understand what it is that you're looking for. And then the best part, guys, is if you don't understand what it is that you're looking for, all you have to do is raise your hand and ask. I love talking about rules. I love talking about advantages. And my goal in this classroom is that nobody gets left behind. Don't ever sit on the sidelines wishing you had a better understanding. Just raise your hand. I'll spend all day on 101 materials. And then finally, the most underused tool. Guys, I've created a KISS trading plan, a keep it simple sunshine trading plan for the new trader. And this isn't designed to be the end of your education. This isn't designed to be your ultimate plan. It can be, because the advantages are overwhelming and they keep you focused on trades that typically win more than they lose, and it creates confidence through the memory of success. But most of you are too damn smart to keep it simple. I was. But this is a stepping stone in your learning journey, guys. This is designed to optimize your chances of success. Why? Because success feels good. It keeps us motivated on the advantages, right? Using that high probability trend trade, or what we call a 50-50 trade. This is your first medium probability trade. And you'll see them today, and we'll talk about them. But the idea is that through simulation and study and class feedback, and it's underlined, and this is highlighted, guys, class feedback through the pictures that you present, and through continuous practice, through simulation, through getting out there and messing everything up. Make 1,000 mistakes. My wife uses the word grace a lot. Give yourself some grace. You're brand new. It's okay to make mistakes. Give yourself some grace. You haven't been doing this for 20 years, guys. To have the expectation that you should be outstanding at something in your first week, first month, first year, is it realistic, right? Don't put that pressure on yourself. But you'll be empowered to craft a plan that's tailored to your personal goals based on your experience reading the indicators. The more you learn, the more recognition you create, the easier this becomes. And guys, this becomes easier every day. And if you embrace the idea of simplicity, it becomes easier still. You're going to see people taking trades with multiple charts. You're going to see people chasing 10, 12 rules. Guys, if you're taking one rule with the best entry initially, you only have four things to think about, right? Just four things. That's pretty easy. That's making macaroni and cheese, guys. Boil the water, boil the noodles, add the milk, pour the sauce. That's it, four, and you eat. This is your entry. This is your first 20 days. But every great entry creates a management opportunity. So ultimately, you're going to have to learn to manage that trade. What I have found, what Nexgen has found, is that this same pragmatic, mechanical approach to an entry, this opinionless approach to an entry, putting yourself in the position where the only time you'll take an opportunity is if your rules are met, is the easiest way for you to find success the fastest. A mechanical approach to management does the exact same thing. It pulls your opinion out of the equation. It pulls your hopes, your fears, your anxiety out of the equation, and you can create an if-then scenario. And I've given you this if-then scenario. If I take a trade at the area of resistance inside of favorable large triggers, great entries create manageable trades, then my stop goes beyond the window of opportunity. Guys, this is how you're going to manage your risk. And at this point in a trade, there's nothing for you to do. Either your stop gets hit, right? And you take that small loser, that normal part of a positive equity curve, or you get a reversal bar in the direction of the trade. So it goes back to if then again. Not I hope that it goes down, I want it to go down, I wish it would go down, I think it's going to go down. The market has visually told me that it started in the direction of the trend, and if it does that, then I'll reduce my risk 2 ticks above, and that's it. It's really pretty simple. It's very pragmatic. And at this point, there's nothing to do. I'm either going to be stopped out for a small little loss. What did we see on that NASDAQ entry? 5 ticks all day long, right? Or my first target gets hit. In this simple plan, this plan designed to create confidence, designed to help you feel successful, your initial target is $100, guys, and $100 isn't a lot of money to most of you. But none of you would turn me down if I tried to hand you $100, right? You reach the $100 and you're happy. Serotonin is flowing, right? You feel good because you just want to trade. You heard your Ninja Trader say target reached. You're like, yes, I can do this. This is awesome. And you're going to reduce your risk to zero. So now you're break even in the trade. You have absolutely nothing to lose. And you have the confidence building through the memory of success. You've already been paid on it. And this isn't designed to make you rich, guys. What this is designed to do is make it easier for your body to sit and do nothing to see if that next target gets hit, right? Because when all of those advantages are in place, 70 to 80% of the time, typically it does. And the cool thing is you do nothing, you have nothing to lose, you've already been paid. And if it reaches that second target, you're going to exit. As a brand new user, you're going to jump ship. You're going to have $300 in your pocket. You're going to feel great because you nailed your entry. You're going to feel awesome because you got paid on both contracts. And this is your beginning, guys. This is the start of your journey. This is the most simple approach to getting into the market, to getting out of the market, to managing your trades. And if you take the fear out through a mechanical management, you're going to find that things typically work out better. Um, that's it. That's simplicity. That's what we're going to focus on. Learning to trade in the market, guys, is like eating an elephant. You got to do it one step at a time, right? Did that one hit the entry back here? Let's see. I think it pulled back. And then three divergences in the same location let me know that that trend might be ending. There's those basic foundational rules, guys, coming into play. And this is going to happen every day. The smalls are up, the large are down. I don't have odds favorable momentum. My large are up, my synthetics are down. I'm coming from a termination condition, but this market has to sort itself out before the advantages are present. But the cool thing is that if I had a set of rules, well, I probably took the short here and got paid all the way down to Fibonacci support, right? And if this isn't in your wheelhouse yet, it will be. because your ability to read charts is going to recognize the advantages in the moment. And now the larger down and the smaller up, but we are coming from a termination condition. We're just waiting for things to sort themselves out, right? To give us the advantages. Those three simple rules, creating three advantages that tell us that it's time to pull the trigger on a trade. Are there any questions about the high probability trend trade, guys? It's not a difficult task, but it will take some study, right? The more questions that you ask, the quicker you're going to get to that point of understanding. Take a lot of pictures, fill your spreadsheet, simulate the correct rules, guys. This is the path to success. It has been proven time and time again. So I tell new users, embrace it. And I tell you older users, if you're not finding the level of success that you want yet, perhaps simplicity would be a great approach, right? Take that simple plan. Take that simple plan, embrace it a little bit, see what happens. I've never had anybody focus only on high probability trend trades and do less than 70%. Throwing that out there, something to think about. So how are we doing? Dwight, you feeling good about it? Sydney? You okay? Walker, how we doing? Snorri, Chef, I know that you guys are newer. It's like drinking from a water hose or a fire hose at first, right? But it's a little better every day, a little more clarity every day. Awesome. And Chef, you're only day 3, man. It gets better and better, guys. It gets easier and easier every day. All you got to do is wake up and go, hey, I'm new. I'm going to walk away from class with one new quiver, one new arrow in the quiver, right? One new bullet in the chamber. I'm going to be a little bit smarter every day. So, guys, that's the first hour. It's the same hour every day. Um, and sitting on your hands is essential. And you know what, Dwight, this is hard for people to do. If there's only two options for you, and you wake up every day and you remind yourself, it's either rules met or rules not met. And those are your only options. Oh my gosh, it makes life easy. And then before I go, I want to share this, and I hope that you're okay with this, PFI, because it's going to happen. Um, I want to show you guys something. How I'm a pretty smart guy. I feel like I'm a pretty smart guy. But I'm going to do something real quick. There's one. And this isn't right or wrong, right? Everybody thinks differently, guys. Everything sees things differently. Everybody has this ability to read charts a little different. But I want you to see something. Let me turn this into one big picture. That's okay. Is it just me? Or is that a lot to think about? And I'm not saying that it's right or wrong. In PFI, your brain may process all this stuff super easy. And I love this because what you're doing is you're developing a plan, right? You're just mentally vomiting everything in your head that you think that you need for a trade. And this is the beginning of the process. So props to you. I'm not knocking it, but what I'm saying is that we can take all of this and simplify. We can take all of this information and we can simplify. And we can pull everything from those two lists and we'll refine it just a little bit more, right? We'll refine it down to advantages and you'll get exactly where you need to be. But guys, the less I have to think about, the easier my life is. It really is. So I'm going to take 5 minutes. I'm going to leave you guys with the live market. When I come back, we're going to start. It's not a mess. It's an outline for success, PFI. Let's call it what it is. It's just the beginning of a masterpiece. Every literary class I took, every creative writing class I took, guys, the first draft was an absolute mess. But those great ideas turn into something wonderful, right? Every drawing that I do starts as scribbles on a piece of paper, and then the refinement process comes in to make it something awesome. And it's part of the journey. Embrace the journey. So here's your crude oil. We'll leave you with crude oil, guys. I'm going to take 5 minutes. When I come back, if you have questions, Do me a favor, post them in the room. If you have comments, post them in the room. If you need a little clarity on something, post that in the room. If you are totally lost, raise your hand and I'll remind you that simple path. But I'll be back in about 5 minutes. We'll get into the second hour. We'll start looking at the pictures, guys. Back in a few. Great first hour. Thank you, everybody. All right, guys, I'm back. Yeah, Ron, anytime Monday's a holiday, they end up on Thursday. I've noticed. Um, didn't even cover that this morning, though, because I think I'm like you. My brain said Wednesday. That's why we check news, right? All right, guys, let me show you what I do. So here's your second hour. This is what we do. Um, is I start scrolling up to the top, and this is what I have to go through. So I have to scroll all the way to the top, and I will begin to get to your pictures, your questions, which means that when I come up here and I click on that first picture, I can't really see what's going on below me. So I will come back and I will answer your questions, but I may click on a few before I come down. And guys, this is an awesome example of chart reading. Two charts and very basic ideas, allowing trigger lines to clear the area. And his particular rules say, let price clear the area as well, right? Let the price get beyond that potential reaction point. And then Ron just looks for quick little picks. But this move over the course of maybe 2 minutes was worth $675. And it all stems back to chart reading. It all stems back to having the advantage of the trend, having the advantage of the clear path, looking for momentum, and then creating a plan that's tailored to his needs. And I think that the one thing that I always point out, right, is one, it's simple. Thank you, Ron. But more importantly, is that if Ron shows me 100 trades, more often than not, they all look like this. I would say 95 of them look exactly like this. He freestyles every now and then just to give me heartburn, but I would say that over 90% of his trades look exactly the same. They're derived from a plan. They are based on advantages, and he's consistent, and it's simple. And then Sydney, you didn't write on it, but I'll write on it for you. Remember, guys, your life will be easier. It will be easier to repeat what you're doing if you write on your charts and talk about why. So, Sydney, let's write some rules on here. I'm going to just put them in the upper left-hand corner. I'm in an uptrend. I know that because the background is green, right? Let me reduce my font size a little bit. I'm in an uptrend. I have odds favorable momentum. I have room to the target, clear path, right? And Sydney, if I say something that you didn't see, let me know. And I know that, whoops, wrong one. I know that if I take this shape tool and I put it on that tail where the rules are met, does anyone else notice how it pulls right back to support, right inside of those triggers? Is it just me or is it amazing? Anybody can do this, guys. Anybody can do it. And look where the market went to. Right to Fibonacci resistance. So let's write that last rule, right, Sydney? Because we want to be able to repeat this every day. Pull back to area inside of large. And this isn't for me. Guys, these rules on your chart aren't for me. I can read your charts. I know exactly what you're thinking. I know exactly what you're doing it. It's gonna upset you eventually, and I'm gonna be in your head, and I'm gonna understand your thought process, whether it's correct or whether it's wrong, and we're gonna work together to get you there. These rules written on the chart are for you. These rules written on the chart are so that you can be consistent, so that you can do the same thing, so that you can identify the advantages, so that you can be the successful trader that you told us that you wanted to be, right? Don't bypass this. This is going to make your life so much easier. Great look, Sydney. I'm assuming that's where you got in and you took profits at the red line. You're doing awesome, though. Print out the checklist and force yourself. I have to write these rules on the chart before I present it in class. I'm still going to cover your stuff, right? I'm still going to talk about it. We're still going to look at advantages. But guys, force yourself to go through the process. Remember when you were in high school or college and you had to force yourself to study even though you'd rather be out doing something else? It's the same thing, guys. You're back in school. And the more you put into it, the more you're going to get out of it. All right, Chef. Posting pictures. I like it. So you didn't take the trade. You were looking at the market, trying to confirm that you're reading things correctly. Are you? So let's start at the beginning, Chef. This is awesome. Termination condition, right? There's that pivot stop out. So you know that we're not going long. And you changed your line of thinking. And here, this is actually brilliant. So this is right where the smalls begin. Right where they very start to begin to get below the large. This is the beginning of odds favorable momentum. This is like it's in that conception stage. And then this was the pullback. And we don't really have favorable large triggers. Um, it's not 100% high probability here, but the read is perfect, Chef. You're with the trend. Everything is down. And what you're seeing right here is that transition period as things start to come into play. There will be a time, Chef, where you'll take this trade. There will be a time where you're like, man, I've seen this. I'm not missing it. I love it. It doesn't quite fit the high probability trend trade rules, but it's an outstanding chart read. And you're absolutely right. This would be your first opportunity to start looking for shorts as the market comes off a termination condition and begins to head that direction. Does that make sense? It's an awesome chart read. It really is. Awesome. All right, who's next? Abdul Aziz. I love it because Abdul Aziz shows me what happens right when he gets in, right? Termination, three divergences kind of confirm it. And this is what we call a high volume area trade. This isn't a high probability trend trade, guys. This is the trade that a lot of you are probably going to look for um, after you get good at the high probability trend trade. This is where that chart reading kind of takes you next level. And let me show you exactly what he did here and how he did it so well. Termination, no triggers through. So the same lessons that we get from the high probability trend trade, understanding where the market is likely to stop, being able to recognize when things are changing, that's the precursor for everything that you do in a high volume area trade. Three divergences confirms the top, lets you know that this really is a great spot, that it's likely to push that market down. Abdulaziz has the patience to let his trigger lines roll, his large triggers on the small chart roll, and he's added a third chart. And guys, a lot of you are going to add this chart. This chart's amazing, and it's going to open doors for you, and it's going to create more trades and more opportunities. However, you need to take all the skills from the high probability trend trade so that you can apply them here. So termination conditions, right? Understanding trigger lines. And then defining the area where the market is most likely to continue. And Abdulaziz, you absolutely nailed it. Perfect execution. And this has been Nexgen's plan for a long time. From a termination condition, these high volume area trades, guys, they're going to create an extra opportunity for you. So you guys that are chasing more trades, this is a great one to go for. Rather than the more difficult, too many moving parts momentum trades a lot of you are doing. Unless the momentum's comfortable, you do whatever you want. And then that turns into trend trades all the way to the next termination condition. And guys, NextGen's been consistent with this plan for 2 decades plus. And Abdulaziz showed perfect execution of a high volume area trade. And it made it all the way down to a termination condition. And that's the only part that was the challenge, right? There was a fib with no trigger lines through. So Abdulaziz, it was worth the shot because of all of it, right? You made a choice, but termination conditions for the win. Does that make sense? Your entry was perfectly exactly where it should have been. The only part of the equation that you left out of the rules, Abdulaziz, was price shouldn't reach a termination condition first. And let me show you in the HVA rules. Don't trade directly into a Fibonacci-based termination area that has the potential to reverse the market, right? Check for room to your targets. And that's the only thing that was problematic with the trade. You're welcome. And that's pretty common. We get excited about seeing these trades and we forget that we still need a clear path. I've done it too. And there was a gentleman in the room that had the same situation for a while, and he has since rectified and is killing his HVA trades. And guys, the rules are in the user guide for that, but I would recommend, I don't make recommendations. I think that without the foundation that the high probability trend trade creates, um, it's problematic. And then Jose taking that picture perfect medium probability trade. Coming from a good bottom, smalls are through, large are not, no divergence, perfect entry. Jose, are you with me in here? I want to talk about something that I see a lot. And if you're only running two charts, guys, that's your entry. That's perfect. That's all the rules met. Eventually, you may give yourself more opportunities for information. Jose, picture perfect. Picture perfect 50-50 trade on two charts. And that's it. I mean, that's awesome, guys. This is everything that we look for on a medium probability trade. Small and large haven't made it through resistance yet, so this area isn't broken. This area still has the potential to hold the market. And Jose said, with no losses of momentum, with strong triggers, with a tiny window of opportunity, he'll take a shot at this momentum breaking the area. This is on your keep it simple plan, guys, and he executed this one absolutely flawlessly. This is your first medium probability trade. The challenge is that KISS plan, that simple plan, says that if there's a problem on your large chart, your small chart should be absolutely perfect. And that is how you create the best of the best advantage. So if I'm looking at one of these trades where it has the potential to break, it's important to me that there's no divergence, that there's strong triggers, that there is a tiny window of opportunity. And Jose, you nailed it. 100% two chart read is perfect. But you gave yourself information that you didn't use. If this chart doesn't have a clear path, you insisted that this chart was perfect, right? That's okay. But do you see how this chart doesn't have a clear path either? And that's, I think, where these trades become problematic a little bit. So one of the things that you can do, Jose, is if this isn't perfect and this isn't perfect, incorporate that fourth chart that you have and maybe wait for a market flow signal or something. Give yourself something to have that advantage. But it was a great look, man. But I think that you're ignoring this largest chart. And I don't know, was the 21 coming from a good bottom? Because your 8 range chart said divergence beyond the outer band, right? And as you were coming down, it also had a breakout bar that created a high volume area against the trade. So it kind of begins to compound a little bit. Does that make sense? And I'm telling you, I'd support this one 100%. Two charts 100%. But I think if that information is there, make sure that I'd rather take this trade. I would rather take this loser with this look because it appears perfect than to know that I had these opportunities to stay out of it. So make sure you're using it. And man, keep posting pictures because we'll keep talking about it. And it's a lot to think about in the moment. It really is. But you're killing it, dude. You're killing it. All right, Chef. Odds favorable momentum with a green background. Smalls are coming up. Everything's cranking. And it bounces right off of support and all that momentum pushes it up. How did you feel about it, Chef? And remember when I said that odds favorable momentum will cover mistakes a lot of the times? So, Chef, your triggers hadn't quite gotten through that area yet. Not yet, right? So we're a little dicey on termination conditions, and I'm obligated because this is an educational room to point that out. But I also feel compelled to tell you that when your trigger lines are this strong, areas break. Areas have the potential to break. You take the pullback right to support, and look at your entry right there at support, right at, what was it, 40, was it 44? There it is. Right at 44, right at blue Fibonacci support, and you take it right up to 48. That's 4.5 points. Nice job, Chef. 3 days in, and you're already embracing the idea of trend and momentum, and you're already waiting for pullbacks. And then it's just going to get better every day. A little bit closer to those goals every day. Strong work, Chef. Uh-oh. Ron said don't break your own rules. You gave up the mid-band rule. So Ron's rule says let the back of the bar clear the area. Awesome. Chef, thank you for that. That's always the goal. It was like a different language on day one, wasn't it? And I think that that's one of the great things about what we do is that repetition really does help. Ron broke his rule. He still got paid because he understands how to read his chart. Ron, momentum trade, and you let it lose all the momentum, and you still took it down. Who are you? Remember I told you guys there's going to be 5 out of 100 that don't fit his rules. That's Ron breaking his rules. Actually, you know what? We're going to say that's Ron bending his rules because of his ability to read charts and his understanding of momentum. He's still able to capitalize. And I think that's pretty outstanding. Let me figure out where I'm at. I lost my place. And then Dwight, I believe. So there's that same one. You took the same one that that Chef took. Odds favorable momentum, right? Breaking through the areas. Everything says up. You take the pullback to support right inside of the trigger lines. In at 41.50, and then you jumped ship at 43.25. So there's that trust piece, right, Dwight? Man, look at that entry. Sniper. And you know that the midband could be a little bit of trouble, right? Because those large triggers are so far away. You see your synthetics down here. I love a 46 exit because if you're in at 41, here's the cool thing. If you're in at 41.50, at 43.50, there's $100 in the bank. And then at 45.50, there's $300 in the bank, and you're out of that trade before it ever has a chance to give you a problem. And that's that mechanical, methodical, right? Great job, dude. Great looking trade. You and Chef are clearly in cahoots at this point. Oops. We saw that one. And then Walker, let's see what you got, my friend. All right, triggers were clearly defined and running parallel to each other. Placed a buy bid just above the fib line. And then you closed just below. You never looked at the small chart. I appreciate your honesty. So, Walker, what you've done here is you have emulated Ron's trade. And I don't know why, Ron, you have got credit for it. But let's talk about the advantages. The advantage of momentum, right? Everything says up. You waited for the areas to clear, so you used those great Fibonacci areas with that momentum. You got above it, and you never looked at the small chart, but can I tell you something, Walker? This is a 100% Picture perfect momentum trade. This is the trade that Nexgen has been teaching for decades. Let the one-to-ones break and buy the pullback to them right there. And look at how small the risk is. And then exiting where the market is likely to go. Walker, excuse me. I hope you're listening because that's beautiful. And you notice that you're coming from a termination that creates a full reversal. So many advantages. Perfect low risk entry. You didn't even know that you took the perfect low risk entry, but you did. And then it reaches the termination condition, and just because your picture's so amazing, not taking the long trade here after the target was already hit was awesome. Great job, dude. Second day. Are you trying to keep it simple? And I just want to ask because I get excited when I see people on the second day taking the very basic concepts and already capitalizing with them. And I think it's such an awesome example that you don't have to have a bunch of charts and you don't have to have 1,000 rules. Embrace advantages and learn how to use them to your advantage, right? Learn how to turn something into them. And the more you post in class, the more we'll talk about it. Gary, rock star. Everything says down. Everything is strong determination. I don't know why you waited so long on your entry. I can't see it. That's too big. It's not going to let me hit a happy medium. Everything says down. Your entry was at the mid-band, right? And then if you missed it, they gave you a second shot. Beautiful. Every advantage, perfect entry. Everything says down. You take profits at that divergence low, and you take second profits down there at Fibonacci support. Gary, beautiful execution. Nice job. It's simple. Jared, it's simple. Same trade, better entry, same result. Whether you got in low or high, the advantages were there. Jared, do you see how all of this momentum carries you to the fib? So this becomes your management opportunity, guys. When that large chart is screaming with a clear path, this is where you start saying to yourself, ooh, I could probably hold to the next fib. And it looks like you're on an actual account, right? So that's cool. I'm not going to tell you how to do it. But when you start working into two contracts, Jared, when you get to that point, that becomes a great opportunity to take profits on the first and really let that second one air out. And you'll be amazed at what your P&L does. But do your thing right now. Your thing's working. Awesome. Just remember, when you go to two contracts, the rules don't change. Your brain is going to tell you to manage tighter. Your brain is going to tell you to jump out early so that you don't give back that second contract. Stick to your plan, man. It's a beautiful plan, and you are executing amazing. All right, PFI. Taking those momentum styles. Everything's up. The path is clear. Let's see what you wrote on this chart. Odds favorable minimum, price broke resistance, hit by market, hit targets ultra fast in a blank. By the time you hit the market, three buyers ran away. So you hit it again. All right, so 195, odds favorable, clear the area, get in, get out at trouble. The only thing that you didn't do on the second one, PFI, because you know that this is... oh, you hit buy market here. That was the mistake? Okay, cool. Because you notice that the momentum's gone there. I love this, dude. Great job. That's a quick little snippet. That's an easy way to get paid from a great chart read, isn't it? So what happened here? You had odds favorable momentum. Here's our simplifying. Let me take the picture real quick. And this is just for your brain to see, okay? There's how you described it perfectly, right? There's what you said had to happen. That's a great example of simplicity. Your brain's going to try and to make it more complex, especially in the middle of the night. So doesn't it make sense? Let's rewrite those rules and make it look like that. Let's pull the pressure, the burden of overthinking off of ourselves. Because beautiful execution, man. Nice job. Really well done. And now the key is to make sure that you can do it over and over, that you can be consistent, that you can find that same trade, right? Over and over again. So that you can execute it the same way over and over again. So you can get those results that are based on repetition, right? And here you have, it's a good look, man. It's a strong triggers, it's no divergence, it's a perfect entry. 100%, right? 100%. And this is NASDAQ. You blew up your first apex today? Right on. You'll probably blow up 50 more during the learning process. That's why I like Sim, but that's just me. Everybody's different, right? Um, PFI, this is a great look. Let me show you something about NASDAQ, okay? Who are my NASDAQ traders, guys? Let me know who my NASDAQ traders are. So on my spreadsheet that I put in the room for you guys, there's some ideas on NASDAQ that are just a little bit different, right? Just a little bit different. Steve, you're only NASDAQ? Me too. That's the only market I trade anymore. And I'm going to be real honest with you guys right now. I got the ever-loving crap kicked out of me when I switched to NASDAQ. My brother got into it and he got real excited about it. And I made one of the most just rookie mistakes is I stayed on my Apex account and I tried to introduce a brand new market, right? So anytime you introduce a new market, anytime you introduce a new trade, it's important. Use that simulator. And I know that a lot of you are like, "Oh, I can only learn if I have skin in the game," and that's cool. You have to work through that. But I went into the Nasdaq and I got slaughtered. And I kept getting run over on what I thought were perfect trades. And I'm sure a lot of you guys have done that too. You're like, "Oh my gosh, this is the best trade ever. Look at this. All the advantages are there. Holy smokes, this is great. I'm going to get rich." Did anyone else do that besides me? And there's a couple things that happen on the NASDAQ too, is the NASDAQ moves fast, right? So because it moves so fast, you think you have to be always active. So I overtraded and I got slaughtered on what would be normally good trades. And what I did, because I've made the mistakes that I'm trying to help you guys avoid, is I take pictures of all my trades. And after about my fifth Apex account of blowing out, um, which sucks when you do that. Let me tell you right now, to make a mistake that you didn't have to make, right? To blow out accounts that didn't need to be blown out because you should have been on sim, you can avoid that mistake. I didn't. I was stupid. I was arrogant. My ego got in the way. Um, I started going through and I literally did the what's working for me, what's not working for me, what's bringing me success, what's whipping my butt. And this is what I found, and it's exactly what you just showed me, PFI. Is that on the NASDAQ? So this is for Tony, for Steve, for PFI, for Gary. On the NASDAQ, when those small triggers are strong against the trade, it becomes a patience piece. When those small triggers are strong against the trade, just give it a second. If you have your area for entry and the small triggers are screaming against you, just give it a second. And what I found is that this happened a lot, right? This happened a lot. When everything is screaming up against me, these triggers, these small triggers tend to act as support when the market's coming up against you or resistance when it's coming down. So a little bit of patience, waiting for price to close on the correct side of those small triggers, created a huge advantage for me in NASDAQ. Here, let's go to NASDAQ real quick, and I'll show you exactly what I mean. And guys, I'm telling you, this will absolutely change the way you trade the NASDAQ. Crude inventory's coming. Thank you, Jose. Let me find one where the smalls are against it strong. 10 a.m. 10 a.m. All right. Are you ready? NASDAQ traders. I'm going to go just 2 triggers so that we're kind of easy on it here. Okay. 10 a.m. So before we do anything, I want you guys to just make sure that you understand that we're there. Where's that 10 a.m.? Let's just assume that it's right here. I have odds favorable momentum. Everything's clear. Everything's going. And I get my reversal bar, right? And at the time of the reversal bar, the rules say identify the areas of support inside. And this is my window of opportunity. Everybody's comfortable with that, right? The rules are the same. 100%. So I want you to see something. As we're coming down to that window of opportunity, the small triggers start coming down as well. And when these small triggers start turning, remember, this isn't a 5-1 chart. This isn't a tiny little insignificant chart. This is this is a 13-2 chart. This is the same chart that is your large chart on crude oil, that is your large chart on the S&P. So when these triggers start turning against me with strength, it creates a disadvantage. They tend to continue pushing. And when they continue pushing, sometimes they'll act as resistance. And I don't know that this one ever turned, but if you incorporate the idea that a close on the correct side of the triggers creates your best advantage, it keeps you from getting run over here. It establishes your risk already, and it puts you in a position to at least not be fighting that immediate momentum. Guys, this is NASDAQ exclusive. And then the flip side is, when do I get in at the area? If my small triggers are a full bar away, I enter at the area. If my small triggers, and I'm using that reversal bar marker, and let's go to NASDAQ and see if we have anything happening. Not really. If my small triggers are below the reversal bar marker for a short or above the reversal bar marker for a long, and I have that distance to get back to them, I enter at the area. This is my personal plan, right? I'm sharing my plan with you. These are my rules for my trading of the NASDAQ. You may find them helpful. So when the smalls are a full bar away and the rules are met on the large chart, I'm very comfortable entering at the area because I've got room to manage, right? Same rules, Mike. 3 divergences. But I can tell you is that if you're on a 50-50 trade and 2 divergence print, you're probably going to get your butt kicked. My personal plan, once again, I won't take a 50-50 style trade with 2 divergences on the NASDAQ. But this is a pattern that you're going to see a lot, guys. Small say wait. Let's see what this one looks like. It's a little slow, isn't it? Sorry. Everything says down, 50-50, divergence. And guys, look at how they're coming up. Super strong, right? This is my patience piece. If I get a close on the correct side at the areas, I'll take the trade. If I never get a close, notice that I never took a loser there. So NASDAQ people, watch this. This one says wait for it. Everything says up. Look how they act as resistance. It says wait, 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 wait. Still don't have a close on the correct side. And then my final one says now go. And once I get a close on the correct side, this is the exact same trade. Off it goes to the races because the large chart said that's what it's supposed to do. So for you guys trading NASDAQ, um, that little incorporation is going to pay dividends, and it may or may not work its way into your plan. There was a trade on the NASDAQ this morning. I don't know. Does that make sense? It's okay for it to break all fibs on small charts. And Walker, I think that the S&P and crude oil, they flow smoother, right? The patterns are the same. It's great. Show me a picture, PFI. You're asking me to use my imagination more than I'm capable of using it. Show me a picture of what you mean. Let's talk about it. On my chart, right here. Uh, right here. All right, so let's look at it. Where's your window of opportunity? From this Fibonacci support, right, all the way up here. Notice that it continues beyond. Your small trigger said that it was continuing beyond. But PFI, my close on the correct side of those triggers is right there inside of that window of opportunity. All that momentum just pushed it a little further. And you have to gauge that. If there's a point where it pushes too far, you're not looking for a trend trade anymore. Your rules aren't met anymore. Does that make sense? So I want this close at the window. And your trigger execution is on the up-down bar breach. So Steve, you're waiting for it to get to the other side? I tried that a little bit. And what I found for me is that there were quite a few times on the close, yeah. And I know some people wait for a reversal bar, right? But what I found is at first I started waiting for the reversal bar and I realized that that wasn't enough. And then I tried to anticipate it, where it would peek its head above and it would do this to me. Yeah. So it was this one. It was that actual close. And guys, I'm telling you, I lost this first one 100 times, and then I lost this one 100 times, and that's how I got to this one. And that's kind of what helped me out a lot. Um, but the idea to get there was exactly the same idea that I gave you guys as you work on your plans, right? Take a lot of pictures. 24, Tony, is where I start. And the cool thing is 24 ticks is only 120 bucks, right? 12 ticks on the S&P, I think, is 100. 12 ticks on crude is 120 bucks. So they're all similar. It's just NASDAQ needs a little more breathing room. NASDAQ is prone to overrun a little bit. Um, and being on that close on the correct side keeps you out at the mid band, right? And then that first close above gives opportunity. We just see an example right there. So Walker, exactly. It is. It is totally. Walker, crude oil and the S&P are going to trend a little slower. They don't have the same nuances and troubles that the NASDAQ provides, because the NASDAQ really is. It's a hopped up weasel. But once you learn your patterns on those other easier to trade markets and your ability to read your indicators in the moment, hey, Sydney, have an awesome afternoon. We'll see you tomorrow morning. But once you can read those charts in the moment, right? Once you can get a hold of the idea on these charts, it's going to translate itself into, and there's your crude oil inventories. Look at what's happening around this fib, guys. You think that there's a fight going on? Do you think the buyers and sellers are duking it out right at a key area? Isn't that amazing? You know where the key area is. So guys, I love the NASDAQ. It's the only market that I trade. However, um, if you're not comfortable with what you're doing, the NASDAQ can be a little problematic. So let's get to the next one. I believe it's you, PFI. Or no. Yeah, that was the 50-50, I think. Yep. Great looking trade. Just didn't work. And that's where PFI, do you see how that strong trigger rule would have kept you out of that trade? So that's one of the things on the NASDAQ. That just helps a little bit. I think that's what spurred that conversation. And then Snorri, termination creates a full reversal. Absolutely. It is a good top. Great recognition. And then 50-50. Smalls are through, large are not. Beautiful. And then divergence on the small time frame says maybe don't take that one on the large. So Snorri, if you're using that simple plan, absolutely. You're probably not going to take this trade initially, right? Because the KISS plan says that if divergence prints on the smaller chart, that's a loss of momentum. So maybe don't take the trade. And then Snorri, are you with me? Let me tell you about how my 50-50s progressed, especially on crude oil, especially on the ES. Is this particular set of rules, no divergence? Gary, all you have to do is go over to Traders Chat and you can talk about them all day long, right? Do you know that nobody's been able to give me a set of rules for their momentum trades yet? Well, one person has, and they're doing them perfect. Nobody that wants to talk about momentum trades has sat down and written rules and looked at perfect entries yet. And I'm not saying, but momentum trades, I don't have the momentum trade the way you guys are taking it. I don't have that. It's not in the Nexgen curriculum. I don't take them personally, so I don't have any basis there. All I can do is steal what Ron wrote and see if yours matches. But you can do that, right? Just saying, throwing it out there. You can take what Ron wrote and create a checklist and take 100 pictures and decide what the execution is. But Gary, I can tell you the biggest problem with momentum traders in this room is most of you take momentum trades without momentum. And it becomes problematic. Or most of you hold momentum trades when the momentum goes away, which is also problematic. So Snorri, when I talk about 50-50 trades, sometimes if I'm coming from a good top with this much momentum, I'll ignore one divergence with really strong triggers in a small window. That's how my plan progressed. As a brand new user, it's okay to say divergence, no trade. But take these pictures and recognize the conditions, and what you'll find is that a good top or bottom typically gives a pretty good opportunity. You still have to manage it assertively, right? Because the area is not broken. But between that good top and these strong triggers and that tiny little window of opportunity, a lot of times you'll find that it's worth 5, 6, 7 ticks of risk to see if this good top really was going to change the direction of the market for the day. Does that make sense? So if you're following the KISS plan, that one's it's not your trade, right? But as you grow and you learn to read charts a little more, that one's probably going to progress its way into what you're doing. And then Gary, trading directly into a termination condition, taking advantage of momentum. The biggest challenge that I see on this one, Gary, is by the time you enter the market, you don't give yourself any room to react if that fib's going to hold. So you're banking a lot on that momentum pushing you through the area. And it looks like it's fibs on every chart that you own with absolutely no triggers through it. So I'm compelled to say that's a low probability trade with very little room for you to even take profits at the trouble spot if that trouble spot actually becomes trouble. Nice execution. Snorri, perfect. And then the question, Snorri, is, the question on this one is, not could it be an entry? Anything can be an entry, right? Are the rules met? Trend up, strong triggers. It is 50-50. It's an area with the potential to break. And then Snorri, once again, we see that termination that creates a full reversal, right? Where am I coming from? I'm coming from absolute beauty. I have the best momentum ever. My smalls are so far through the area. And that is a picture perfect entry with a perfect condition on the small chart. I would take this one every day and hold it to resistance and not think twice about it. Beautiful read. Great looking trade, Snorri. Nice work. And then is this the gap theory? Does the reversal bar... So for me, Snorri, for the gap theory, these triggers are above the reversal bar marker, right? For them to have room to make a reversal bar, to be a full bar away, they have to be above the reversal bar marker, not below. And that's what creates the gap. But notice that you're directly into a termination condition here. So the termination on its own is pretty good. But for the gap theory to be in effect, these large triggers, you want them to be above the reversal bar marker there. Great question. And if you need a little more on that, let me know. I'm happy to talk about it. And then Walker once again. Let's see where we're at. It did close above fib line. Set bid just above the fib line, waited for the pullback, only it dropped a lot more. You weren't looking at the small at all and regretted it. Trigger lines were not defined. And you're absolutely right, Walker, so that's a great read. You didn't have odds favorable momentum, right? So we don't know if 87.43 even has the potential to clear. The smalls are below it and the large are below it. So Walker, if you embrace that idea that an area is broken when both sets of triggers get to the other side, it'll keep you out of these little indecisive moments, especially when they disagree. Here, do you see how you had the momentum pushing it? But here, there just isn't any. And that becomes problematic. And this is a patience piece for you. And then J Solar, the reversal marker is this white line. And it just shows you the point at which the most current bar will become a reversal bar. And on the smaller, faster chart, it's the gold line. It's the price at which this bar becomes a reversal bar. Great question. Walker, did that make sense? Let that odds favorable momentum lead the way, man. Creates such an advantage. And then Sydney left, but we can take a look. Ooh, other charts. I'm not sure what we're looking at, but there's no agreement, so this is a great opportunity for no trades. And then Mike M, let's see what you got. Yeah, I know exactly what this is. And then there's your picture, Snorri. And you're welcome, J Solar. Termination condition creates a full reversal, gives odds favorable momentum, no divergence, perfect entry. Get paid at the one-to-ones. You saw the mid-band without triggers on the 13.2. Oh, without the triggers through. I got you. Mike, quick lesson. Gosh, I love it when you guys post pictures because we all get smarter. So, Mike, large chart midband, 13.2 midband is problematic when the large triggers are a full bar away. And that's when that one's really going to act as a termination condition. When those large triggers don't follow and it hits it, that's where I'm going to let it be a termination condition. When your large triggers are right on top of it, I'm not really concerned about it. It's less likely to bounce. And even more so when you're coming from a beautiful termination condition at the bottom. You had 3 divergences with a third higher divergence. This termination condition and all that momentum, this midband is nothing more than a pink line. Take that trade. Beautiful trade. I don't disagree though, right? Those are one-to-ones. And when you got there, 54 is not a bad exit for a 52 entry. That's 200 points or $200. And what you did is you did the old I was talking to someone about this last night. Doesn't this amazing entry look an awful lot like that with this look on the 13 too? Guys, this was one of my most consistent mistakes in management when I first started out, is losing sight of the big picture, losing the sight of the three advantages: the advantage of momentum, the advantage of a clear path, and the advantage of an entry area right there at those large triggers. And I did this a lot. And I put my stop not where the market shouldn't go, but right where I'm expecting a bounce. So I would get stopped out of a trade after giving back 15 ticks right at the area where it was most likely to continue. So this is one of those deals where if you're gonna hold and you're gonna wait for that next push, your initial stop has to go where the market shouldn't go, right? It's that break even. Or just take profits right at the trouble spot, and if you get an opportunity, re-entry. Does that make sense, Mike? It's a great trade, and that's a very common newer user, or as you work on your management. I did that a lot. I did it the other day, and there's nothing more frustrating than looking at it after the fact, for me anyway, and just going, where the market shouldn't go. That's why John Novak said that for years in my ear, because that's exactly where it should bounce. Outstanding trade, though, Mike. Great look, great read, and just an opportunity to get paid a little bit more on it, which is always cool, right? And Snorri, thank you for putting two pictures on there. You knew that I wouldn't catch it. Odds favorable. Everything says up. The path is clear. You take the perfect entry. I love it. Was it rules-based, Snorri? Trend up, large trigger strong, above, clear path, area inside of favorable large triggers. That's a rules-based trade, right? And you were feeling nervous, and it did. It overran that window a little bit, didn't it? Ooh, that's always terrifying. Mike, it's hard. It's hard to be okay with losing money, isn't it? And I'm going to tell you that there's going to be a switch in your brain where it's not about losing 5 or 6 ticks, because I don't like to lose money either. I really don't. I'll admit it. My brother is so okay leaving money on the table and just daring them to come get him because he knows he has the advantage because he's so far into what he's doing. Um, it makes me nervous. And man, Snorri, this is one of those things. Great trade. Everything's up. The area's right. The entry's perfect. That initial stop of like 12 ticks, 14 ticks, gives you the opportunity for it to overrun a little bit. And that gets scary, doesn't it? And if you put your stop outside of the window here at 55 and you got stopped out, I would still say great trade, even with a small loser. But keeping that initial stop in place because of the advantages on this chart pay dividends. And I love your exits, right? $100, $200, $300 the easy way. Nice trade. Does that make sense, everybody? Initial stop at 12 to 14. Be willing to list. Hey, Chef, have an awesome afternoon, and I'll see you tomorrow morning. Great trading, Snorri. All right, Jay Solar, let's see what you got. So, Jay Solar, it's just another instance of trickle-down theory. So we found your pattern. Are you with me, Jay Solar? I feel like our relationship's a good one, and I can say this. That's one of those danger words, isn't it? Although 21 says okay, although facing a termination condition. So what you're saying is that you've reached an area likely to stop the market, but you're going to take the trade anyway, right? That's exactly how I read although. Other words that'll fit into that one, but, still. So if you only had two charts, perfect, right? If you only had two charts, I love everything about it. It's not from a good bottom. But yeah, that's odds favorable. It's a clear path. Everything's perfect, right? I love this trade, Jay Solar. I would take that trade. But you had a mid band from a bad bottom with the large triggers a full bar away. You had a textbook termination condition. You actually had the advantage that a lot of us don't have on only two charts. So this is where I say, guys, use that advantage if you're going to have it, right? Resist the temptation to say although, and embrace the idea that if this one says we're more likely to go down than up, let this one be perfect. And this one was perfect. This one was perfect. You made a calculated decision to trade into that midband to see if it got to the fib. I don't disagree with it at all. But that's for all of the momentum and the clear path and the beautiful entry and everything perfect all day long. 100%. Beautiful, 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 beautiful. And then there was just that little extra information that could have kept you safe. And we saw the same thing on an earlier chart. Sometimes if you're going to incorporate that large chart, make sure you respect it a little bit. You said both charts had divergence in the works, right? Jay Solar, if I take my wife out to dinner and we go see a movie and I park on the curb and I walk her up to the doorstep and we're holding hands and everything's great, I have the potential to get kissed at the doorstep, right? I have the potential to get a smooch. But until our lips touch, it's just potential. I'm not bragging to my friends, right? I'm not getting those little hearts in my eyes. So let's go through the rules. And remember that sometimes the answer is because the market's a jerk. Don't forget that sometimes that's the answer. Strong top or bottom, there was up here, but that strong top got you all the way to the fib. So I like that. All triggers pass the area on the 13.2. So you do have a clear path, and you do have a clear path. This is a little redundant. No terminations on the 13.2. All triggers pass fib area on the 13.2. That's the exact same rule. You're just repeating it. So let's look at it. You're sacrificing momentum. We can agree on that one. So this is a trade without the advantage of momentum. And this is how I break down trades all the time, guys. This is how I look at my own trading. I don't have momentum. I know that for a fact. Joel, take care, bud. And then I also, Jay Solar, look at these weak triggers. So I've got no momentum. Yep, and I've got no momentum, and I've got no momentum. So I like to go on the idea, and this is just me, right? Your results may vary. That if I'm going to sacrifice one of these, whoa, I just lost you guys. Hold on, I'll be right back. I lost all of Discord here. Let me get back into that education room. I know usually you guys can hear me when this happens. I'm coming. Can you guys hear me? Let me know if you can hear me, and I'm going to get my screen back up. All right, cool. So I love to go on the idea that if I'm going to give up momentum, I want a clear path, which I think you did 100%. There was nothing in the way, right? But I also want, man, I want that area defined. I want an area inside of favorable large triggers. So I'm going to go back to your picture real quick. And I think that this is going to be kind of a moment where you're like, whoa, maybe, right? So without all that momentum, by the very basic rules of window of opportunity, Jay Solar, this is my window of opportunity, isn't it? Before that reversal bar ever prints, I'm at an area inside of favorable large triggers. And then you did get in at the large triggers, but there's your midband above it. So for me, this is a look where I really kind of, and I say to myself, there's just no room for a pullback, right? There's no room to get back. With this loss of momentum, these areas that are potential entries are they're above all of the triggers. And I find that if I pull all the way back to here, it's problematic. And I find very often that without this momentum, and my area is well above the triggers, it takes away a lot of advantages. And I think that you're going to find that too. So those are the problems that I see with this one. The clear path was there, but with this loss of momentum and this weak look here, my brain automatically starts to shift up to here. Does that make sense? Awesome. And then Snorri, absolutely. Um, So on the NASDAQ, you're trading a 34.5 for your large chart and a 13.2 for your small chart. And John's built time frame or workspaces to look exactly like the 13.251, but it just slows them down, right? And if the 13.2 is too fast for you, you can trade a 55 and a 34, or a 55 and a 21. Yeah, you can keep bumping those Fibonacci's until you find one that's appropriate for you. But the key is when you start doing that, it's important that you can still have that great look, right? That you can still have that look that creates success. NASDAQ, I think in most cases, for somebody that's comfortable with the rules, the 13.2, I believe, is tradable. It's still fast, but it is tradable, and that's I've been doing this longer than the average bear, so for me it is. It wasn't when I first started with it. I'm not going to lie. It took me a couple months to come to terms with it. Um, but you could absolutely play with higher time frames. Grab a 55, and grab a 21, and go back and do those same drills that we can do on a 13.2 and a 5.1. Right? So let me pull up NASDAQ. Let's pretend like this is a 55. Go back and circle the tails on the 55 and see where they line up on the 21. And what you may find, and this is typically what happens, is the way this is a trend trade from the advantages on this chart, that higher time frame, this becomes a trend trade from the higher time frame. So you're absolutely right. It's just fractals. And then you pick the one that suits you, right? You pick the one that's most comfortable to you. And then last one, J Solar, momentum, momentum, momentum. And this is the exact same look, right? So J Solar, I think that the lesson on the first one is the exact same lesson on the second. Let me click on your second. Are those really that similar? Oh, they are. I mean, that's almost identical. That's kind of cool, isn't it? So there's an awesome pattern that I think is going to work to your advantage. Great pictures, man. Now you're in that refinement. I saw this, guys. Ninja Traders reducing margins. Do you know why? Because all you guys are going to Apex and not executing through them, and they realize that they have to be competitive. Yeah, I saw that. So Jay Solar, great work. And I think that we found a pattern that's going to bring you a level of success, that's going to help you get to where you want to be. Nice job. Thank you for posting those. It is an absolute blast watching you guys get better. And then you're waiting for the triggers to break above the red fib on the 13.2. Or, Dwight, call me crazy. They do, Gary. I take one trade on a micro ES every month to keep my data so they don't charge me. All right, can we talk opinions real quick? And I think we talked about this one the other day as well. Um, And this is just where I believe language is important, right? This is where I believe, yeah, I don't do Top Step, so I need NinjaTrader 7 so I can teach the class. So for me, that works out. But if you're not using it, yeah, you can close it. So you're saying that you're waiting on the triggers to break above the red fib on the 13.2, right? There's divergence. You need a clear path. Can we look at the other side of the coin, Dwight? I have smalls below the large. It's already created a downtrend. I'm looking at three divergences. So there's two sides to every coin, and I want you guys to embrace both sides every time you read a chart. So while I agree you're waiting on everything to break to look for that long trade, right? Dwight, go ahead and write. What has to happen to look for a short trade? What if those triggers roll? What if those three divergences work? What if it doesn't make it to that next area and you end up with a beautiful setup right about here around 46, but your brain's still waiting for it to bounce and go above those fibs? I've done it. I've been married to a trade. I've been married to an idea in my head so much that I don't recognize the other side of the coin, that I don't recognize those other possibilities. Um, so always try and keep your brain open to the idea that there's always two scenarios. There's always two possibilities. And then Jeremy P loves to be the one to say, hey, you know what? Mark, you said nobody has a good checklist. Awesome. You're waiting on the other side too? Ah, Jeremy, I'm in your head. You added a rule. So there's the process, right? So let's see where you went and where you are. Price coming from a termination. Small triggers are below bars. There's a question mark. No termination conditions ahead. Entry area, the small triggers, and insider crossed large 13.2 at mid. Wow. Let me see what this one says. Price coming from a termination condition. Can we do this twofold? And yeah, and there's the question, right? Is can we take your rules and apply them to a picture where they're true? Not you specifically, Jeremy. I mean, you specifically, but for everybody. Is can I take a picture of the trade? Whoops. This is how plans are built. So awesome, right? Can I take a picture of the trade and can I apply these rules? Coming from a termination condition. So there is no triggers through Fibonacci support. Absolutely beautiful. I would say that rule number one has been met. Small triggers on the 5-1 or the below the bars. Okay, so for a long trade, we're talking about a long trade here. You want your bars to be on the business side of the small triggers. So perfect. Small triggers on the 8 range cross. Can we assume that that happened? What did they have to cross? Did they have to cross the area? Did they have to cross the large triggers? Did price have to cross? Does that make sense? Okay, so they roll. So they go from down to up. No termination conditions ahead. So how do you feel about that Fibonacci area with every trigger line below it? Does that count as a termination condition in your book? But isn't this awesome how you can present rules and we can go through them and I can make sure that I understand them? Entry inside the small triggers and cross large 13, which you didn't get yet, right? So at the time of your entry, that's the look on your large chart. They might be rolling just a little bit. And your small chart at the time of entry, you're good. Have them past the small triggers. Okay, so on the correct side. I like it. No, I see it. So you're on the correct side of the synthetics, right? Hey, Ron, have an awesome, awesome, awesome afternoon. Cool. So check this out, Jeremy. Termination condition, right? So the way John has it, and I'm not saying that your rules have to be John's rules, say that a reversal bar must print on the large chart. And what that does is it kind of confirms that it's not a little stutter. Um, I would say that you broke the no termination conditions rules, but let's talk about all the advantages, right? So we have an awesome termination condition, right? You get to the correct side of those synthetics. You let it break this Fibonacci area, that potentially problematic, and notice how it pulls right back to the small triggers in an area. Jeremy, I love this trade. I really do. And I think that maybe the concept that you took as an assumptive and maybe not in the rules and not written in there is that you get to the correct side, right? And then it pulls back to those strong smalls right at an area. You took the first shot. But guys, this is how plans are built is you've got to take the rules that you've written and compare them to the picture that you took and make sure that they jive. Make sure that they're consistent. Yeah. 65 is a great number, Jeremy. And man, just nothing but props and credit to you for taking the time to take the picture, for writing out what you want to see, what you need to see, and then really for just having the guts to drop it in the room and say, let's put my rules up against my trade. And the only thing that we really came up with that may have not really been consistent is this one, the no terminations. But with those, yeah, with those conditions, man, this is how plans are built. I love it. I know he has. I've been watching. Guys, I go to the traders room and I look at what you guys are doing. This is an amazing example of how plans come to fruition, right? Trial and error. So how do you develop a plan? You take pictures, you write rules, you make sure that they line up. Great job, dude. Thank you for posting that because I really feel like a lot of people omit that part of the learning process. They just want to do it. And I think that you nailed it, man. I really do. Great job. And remember that this is an education class, right? This is an educational room. So a lot of times I may have to point out things that you already know, right? Like that termination condition, Jeremy. I'm obligated because it's an educational room to point out that the trigger lines are below. Doesn't mean that it's not a good trade. And then there's that termination condition, right? And Jeremy, this one right here fits your rules 100%, doesn't it? Rockstar. Did you catch it? Am I reading it right? But this one fits your rules, right? So how cool is that? That you can present a checklist to me, and if I just follow your checklist, then one day I might be able to take this trade the way you took it. I love that. But that's, guys, that's how, so it's repeatable. Your plan is repeatable. It's recognizable. I love that. Thank you for that. And then coming off of that 50-50 with multiple divergences, guys, there's your termination condition. And this is where it gets below the synthetics, and there's a pullback to the midband with the small triggers down strong, and holy crap, it worked again. Little bit of overrun, right? But three divergences says, oh, it's just a little bit of overrun. And then the small triggers come down strong, so you know not to look for the long, but if you took it, three divergences says, get the hell out. And then, Jeremy, your plan's met right there. And down it goes, and it's still freaking going. You did the work, man. So, Jeremy, for my newer people, can I ask you, did you fight the idea of a simple plan before you embraced the idea of a simple plan? I did. I always like to ask people that are showing me amazing things,
Did you fight it first? Of course you did. We all did. So if you fight it, guys, you're normal. If you make bad decisions for a while, you're normal. But eventually, you get to the point. If you're John Novak talking to his brother, you said eventually you're going to hate losing so much that you'll follow your plan. He's right. He's right. So what do we have? Strong triggers, right? 50-50. Guys, there's the bottom of my window. Do you see how quickly that happened? And it may not come back and get me. But if divergence prints, all I have to do is cancel the trade if I'm following that really strict brand new user plan. I love it. Guys, we've got 20 minutes. What do you want to talk about? Talk to me about your questions, guys. What are you working on? Are you going through that process of taking a lot of pictures, putting them up against the rules, making sure that you can be consistent? Because that's an outstanding way to get to where you want to be. New users embracing the idea of simplicity. Old users that aren't consistent yet, embracing the idea of simplicity. Man, look at that. Anything can happen right at a fib. You're just waiting. I love it. Dwight, what you are showing me right now is that you are capable of being patient. You are capable of waiting for it to be perfect. And I know that that's one of the challenges that you said you had initially, thinking that every move is your move. So great job, dude. Great job sitting on your hands and waiting for advantages. And sometimes they're not going to come as quickly as we want them to. But if you're patient, if you wait, yeah, chef, we all do that. Because you're going to get to the point where you're going to start seeing it. You're going to be like, oh my gosh, here comes along. And then it's going to take a little bit longer than you wanted it to. And you're like, well, I'm going to take along anyway because I know it's coming. And they'll stop you out a couple times. And that patience comes through repetition, guys. The patience comes from seeing the same darn thing happen 1,000 times, right? We'll give you the best software. You've got the best software. I think the education's pretty outstanding. The only thing Nexgen can't give you is experience. And that experience just comes through the repetition. From doing the same thing over and over to where this is so burned in your head that you do that. I did. I sat on my hands for 3 hours the other day waiting for my rules to be met. Opinions are a killer too. Man, look at this. It just keeps getting better, doesn't it? And right now, all I'm saying is I hope it doesn't hit that darn fib before it comes back and gives me an opportunity to get paid on the way to that darn fib. What direction is the market moving? Everybody, up or down? If you're brand new, go through that process. It's going down. Do I have odds favorable momentum? I do. Yeah, I do. Dwight, small's below the large are wide. I don't have a clear path, and I want you guys to see something. My small triggers are getting above that reversal bar marker. My plan says, not yet. Because once these aren't a full bar away anymore, a lot of times they're going to act as a level of support if there's a bounce. That's the way my thought process goes, guys. That's what my plan says. That's what my study produced. That's what my spreadsheet told me. Is that when my small triggers are above the reversal bar marker, for me personally, I'm going to let it push a little bit higher. 5-1 looks really nice, though. But there's a loss of momentum on a 50-50, right? Small triggers. Say no because the rules aren't met. Whoops. Gary, you... the word started. Got caught on that. Hold on. Let's see if I can get this again without started. That's a great sim day. 77% winners. And everything you've showed me has been great today. 77% winners. But look at that, guys. $800 in losers. That's the hard part, is being okay with that. You're going to take losers on your way to profits. Nice job, Gary. And now I have 2 divergences on a 50-50. Only one? Great job. Guys, we're just going to talk through the NASDAQ right now. I've got 2 divergences on a 50-50 trade. And I've got small triggers above the reversal bar marker. Let's just see what happens. And remember, if it goes down 100 points from here, it doesn't mean that my plan isn't a good plan for my own personal trading. Because remember, nothing's 100%, right? What we're doing is we're giving ourselves a statistical advantage every time we enter the market. And it looks like the NASDAQ wants to push a little bit. We'll come back to it. It's kind of like the boring part, skipping the commercials, right? Weak triggers. Dwight, you knew not to take that long because of that look, right? Great job, Dwight. Did you get bored and take it anyway? Not that I've ever done that. And look at this mess. Large triggers are down, smalls are below it. The market appears to be going up, but it's coming from a termination. What do you think, guys? Can we identify a range-bound market using Fibonacci and rule number 2? How many chances are you going to take before you realize that resistance is holding and support is holding, and you should probably get above or below? No, it's like that some days, isn't it, Jose? And then some days it's gangbusters. Some days it's like an ATM. But guys, this is just one more advantage that Fibonacci gives you. One more advantage that rule number 2 gives you. I know without question that the buyers can't push through this area yet. And I know without question that the sellers can't push through this area yet, which means that I have a clearly defined range through Fibonacci, and my advantages lie beyond that clearly defined range. Give me a why if that makes sense to you. Because this is another one of the advantages for you guys that are veteran traders, for you guys that have been chewed up in consolidation before. How freaking amazing to be able to identify these ranges visually, to be able to identify whether or not there's momentum inside of that range, to be able to identify when the range is broken and have a clear, concise set of rules to keep you on the good side of things. I love that. It's these little things that the more you use, look at that, it never made it, guys. Wasn't our money. Just never made it. Dag nabbit. But we knew right where it was likely to go, didn't we, with all that momentum? And now we have to see what happens at those one-to-ones. Is there anything you guys want to talk about? Dwight, they never broke, did it? Never made it. I love it. Guys, great class today. Did anybody learn anything? I hope so. I think that you trade rules. Your rules don't know what market it is, right, PFI? There are times when gold is a little temperamental, where it overruns areas, right, where it doesn't reach areas. There's a reason that for so long we've offered up workspaces on crude oil in the S&P. Because typically there's potential. This is the S&P today, right? A lot of you caught that short. A lot of you showed me this long, right? And that started about 9:30. And other than that, it's been slim pickings. Wouldn't you guys agree? But if all you did is catch those two, life's pretty good. If you caught this one up here, you've had an outstanding day. Wouldn't you guys agree? If all you did is wait for the absolute best of the best today, wouldn't you agree that you had a pretty good go of it? I would. And then let's go to crude oil on this inventories day, right? And this one's been a little tougher. But a lot of you got paid on this one all the way up to resistance. Even my new people did. I think some of you may have gotten paid on this one down to support. So that's two. And that may have been it for your high probability. So a total of 5 trades between 2 markets. So let's say on those 5 trades, and we saw that they all ran, right? That's a potential of $1,500 on that super basic, right? But we're going to say, oh man, I took a loser in there somewhere. So you're up $1,200 on the day on 2 markets on the most simple plan. And you can verify it by going back, circling tails, identifying the rules, right? You can validate that that plan does in fact work by going back. Guys, you can give every ounce of your being to prove me wrong with just a little bit of study. And nope, John, there wasn't 98 trades today. Unless you took 5 trades on a 20 lot, in which case you're doing great. Dwight, why are you looking for an entry? Is it because of the downtrend? Is it because of the odds favorable momentum? Is it because of the clear path? You have a clear path. So price hasn't reached a Fibonacci area with all the trigger lines above it? Almost. You almost got, but she turned you down last minute. Or he turned you down. I don't like to assume. Now we're starting to clear areas, right? Me too, John. How do I break my rules to take this trade? You don't. This isn't your money. This is where John Novak would tell the class, guys, if you walk into a bank and you say, give me all of the money, you're going to get tased and hogtied almost instantly by security. But if you walk into the bank and you say, hey, may I have my money, please? May I have my rules-based trade? You're going to walk out with your money. And there's a big difference. Sometimes it's just not yours. And on this one, there wasn't an entry. Thank you for posting that, John. And now, Dwight, we're getting close to that clear path, aren't we? You know what you're looking for. You're sitting and you're like, chomping at the bit. Give it to me, give it to me, give it to me. And we'll see if it does. And it's going to be up to you to decide, because I don't tell you guys when to trade. I don't tell you when to not trade. You're going to have to determine, oh man, you're making me proud right now. You're going to have to determine if you're willing to take a trade into a divergence low. And notice how it went 1 tick past it and it's starting to create a bounce. 1 tick. Do you think there's somebody that recognizes that as a significant spot? And that's it, Snorri, and that's everybody. If it misses your entry, you start having this, oh my gosh, this sucks, I'm not getting paid, what am I supposed to do? But I'm telling you right now, guys, the more time you spend taking pictures of the perfect entry and seeing the results that come from it, the more you study this spreadsheet, and I'll give it to the room one more time, and you develop that trust in the idea that you don't have to be in every move to make money as a day trader. You don't have to catch every swing to make money as a day trader. What you have to have is a statistical advantage every time you get in. You have to have the odds in your favor, right? Your dice have to be weighted. And they're weighted with momentum, a clear path, and an entry area. And once you establish that pattern and you commit to it, guys, it takes all the pressure off. It's just a matter of clicking a mouse. And then Jeremy, not a termination. God, I hate to be the nitpicker, but everything says down, the momentum is down, everything is down. The momentum is down, you're on the correct side, you take the pullback to the midband, and you get out at where that divergence from a bad top is likely to push you. I love everything about it. And then there's your small chart making that roll for you. Nice job, Jeremy. Would you agree that that's not a termination condition? You might have confirmed the overrun a little bit, right? But guys, once you know your rules and you know your looks, you may bend them a little bit. And Jeremy, I don't disagree with this trade at all, and I think your execution is beautiful. But remember that because this is an educational class, there will be times where I have to point out that maybe that isn't a termination condition, or maybe I have to point out that it is an odds favorable momentum, and that this long trade with weak triggers right here, could you imagine eliminating this one from the mix? How much more would you get out of this one at the end of the day? Does that make sense? By taking away this, gosh, I hope it goes up, and embracing this everything is screaming down, sometimes it's not the winners that are getting you to where you want to be. It's the avoidance of those little those little rule breakers. Yeah. So $900, that's significant, isn't it? And that's one of those lessons that you'll develop over time. You'll start learning the stuff that doesn't work that often, or that you'll recognize in your brain and your gut that there's a maybe situation. And that maybe situation doesn't bring you success enough to warrant a spot in your lineup. So, Jeremy, great job. I know your plan's solid. Anything can happen, triggers, but a clear path, and you take the stab back to the area. First target, and then divergence on weak triggers. You know that it's likely to push up higher. You exit the trade. Mike, nice job. Of course, your stop's right on one-to-ones again. That's twice. You took a momentum style trade without an awful lot of momentum. So your stop is totally appropriate, a loss of momentum. Nice job. Great trade. And guys, that's it for me today. It's been an awesome run today. I think you guys have presented a lot of great questions. I really do hope that a lot of you may be a little closer to where you want to be after today's session, and hopefully it just continues that process. It is being recorded. It will be posted up on YouTube. Tell your friends, guys.